Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London. Here are your top stories. The Fed starts tapering. Jay Powell says the central bank will start trimming asset purchases this month, but he's in no rush to raise rates. It could go either way at the BOE. The central bank has a knife-edge choice over whether to hike. We will speak to Governor Andrew Bailey later today. And Credit Suisse plans to exit prime services. The Swiss lender looks to lower risk after the Archegos and Greensill scandals. We'll bring you our exclusive conversation with CEO Thomas Gottstein and Chairman Antonio Horta Osorio. Okay, the futures in Europe looking up, gains after another record on Wall Street, with the Dow, the S&P and the Nasdaq all hitting new highs on the back of what many interpreted as a dovish taper from Jay Powell. Let's check in then on how this is playing out. In the first few seconds of the trading session here in Europe, you had, of course, also the commentary from Christine Lagarde at the European Central Bank, also pushing back on market expectations, saying essentially a rate hike from the ECB next year is off the table. The FTSE 100 is gaining 0.4% as we look ahead to that decision by the BOE, with economists split 50-50 on whether or not they do indeed go for a rate hike. The CAC 40 is gaining 0.4%. EUR and Spain, you're essentially flat. We can look at the cross-asset board then to see how things have been playing out. That yield flattening has changed to yield steepening on the back of the commentary from Jay Powell. He's looking at inflation continuing in the first and second quarters of 2022, but again, delinking the taper from the rate hike, saying the conditions are more stringent before you get to hikes. In terms of the 2-year, still below 50 basis points on the US 2-year. The 10-year is just below 1.6. The pound, of course, in focus ahead of that BOE decision. You've seen sterling lower by about 4% since the highs that we saw towards the end of May, currently at 136. Crude also in focus. It's OPEC Plus just clinging on, WTI above that $80 a barrel. Inventories higher in the US, and we know that the US president himself has been pressuring OPEC Plus to increase supplies. That meeting later today. Okay, so the Fed has finally unveiled its much expected tapering of stimulus. And as for the timing of a hike, the message from Jay Powell is be patient.
It is time to taper, we think, because the economy has achieved substantial further progress toward our goals. We are prepared to adjust the pace of purchases if warranted by changes in the economic outlook. Our decision today to begin tapering our asset purchases does not imply any direct signal regarding our interest rate policy. I don't think that we're behind the curve. I actually believe that policy is well positioned to address the range of plausible outcomes, and that's what we need to do. I do think it would be premature to raise rates today. That's not. I don't think that's controversial. We want to see the labor market heal further, and we have very good reason to think that that will happen as the Delta variant declines. Inflation has come in higher than expected, and bottlenecks have been more persistent and more prevalent. We see that just like everybody else does, and we see that they're now on track to persist well into next year. We think we can be patient. If a response is called for, we will not hesitate.
Okay, let's get into the market reaction then with Venram from our Markets Live team. Good morning, Venram. The market's obviously applauding what we're seeing largely as a dovish taper. We have to applaud the communication and forward guidance of this central bank, do we not? The taper tantrum is long gone at this stage.
Morning, Don. Absolutely. I mean, the first round of this battle with the markets goes to Jay Powell, you could say that. But the question is, the Fed has essentially set up a tryst with destiny of the bond market, so to speak, into the middle of next year. I think that the key point, the key takeaway for me is that the Fed said that, look, it's premature to discuss rate hikes, but what they did not do is they did not push back on the market's pricing of rate hikes, and that has very important takeaways for the markets. From next year, I believe that the front end is a ticking time bomb, and the markets will, as the markets start to aggressively price rate hikes, I think that the front end will sell off. I actually did a study on this, going back and studying the Fed's rate hike cycles, starting with the dot-com bubble. So in the 3 rate hike cycles that we have seen, for every 25 basis point increment in the Fed funds rate, we have seen about 17 to 18 basis points of increase in the 2-year rate. And I think that the 2-year rate is kind of nonchalant to the prospect of rate hikes. And I think that the front end will sell off aggressively come next year. Tom?
Okay, Venram, the importance of highlighting the risks, as you say, as you argue, for those who have loaded up on the front end of the yield curve there, given your expectations, you're going to see some sharp rate hikes, at least towards the second half of next year, the timing being set there and laid out by Jay Powell. When it comes to the Bank of England, we've talked about the fact that the markets are pricing in, of course, a pretty high chance, a significant chance of a rate hike. The economists are 50-50 on this. What is the market reaction to a rate hike if we do get one from the Bank of England?
I think that, we have sold off quite a lot since the end of July. At the end of July, we were about just 6 basis points on the 2-year rate. Now we are about 70-plus basis points. That's a phenomenal sell-off that I haven't seen in recent memory, that I definitely cannot recall in recent years. Now, what does that mean? That means that the markets are very well positioned for the Bank of England rate hike, today, or whether it's today or December. The markets have already discounted that. What will matter for the markets is what the BOE has to say on inflation, the revised inflation forecast, and i.e. what that means for the bank rates trajectory into next year and the year beyond. And a lot will come down to what the Bank of England guidance is. And regardless, I think that considering how much we have sold off, I think markets may actually rally on the news as the dust settles. The knee-jerk reaction is difficult to forecast because it depends on what the statement will say. But as the dust settles, I think that there is the risk-reward asymmetry here.
Okay, interesting. Inflation, of course, front and center for the Bank of England, and part of that inflationary picture is driven by the oil price. Currently, WTI just holding up above $80 a barrel. Looking ahead, of course, to OPEC Plus, as we discussed at the top of the show, what are the dynamics for oil going forward, and how does that play into the inflation picture, Ben?
Well, I mean, if oil prices continue to climb higher, and I must say that oil prices have been much more resilient than anyone foresaw, and I think that even at $75 a barrel, it looked pretty expensive, and now at $8. I mean, it's going up and higher, and if it continues to climb higher, I think that, that will worsen the inflation dynamics. Obviously, that is also a tax on demand, consumer demand. And what that means is that, the BOE and other central banks will be forced by the markets to raise rates more aggressively and bring them forward rather than later.
Okay, Venram from our Markets Live team, looking ahead to that all-important Bank of England policy decision, of course, later today, when we will also be sitting down with the Governor, Andrew Bailey, after that, and also flagging that OPEC Plus meeting and whether or not, indeed, we hear anything from those members about increasing supply. Let's check in on some of the market movers. It's been another big day for earnings, particularly the banking sector across Europe. The standout today, Commerzbank, look at that, gaining more than 5%. That's the back of earnings that beat. They rose to almost 500 million euros. The revenue declined less than estimated, and they do expect this German bank to make a profit this year. Bloomberg writing up about the fact that this seems to justify the CEO of this bank's turnaround plan. So optimism there and being rewarded by investors on the back of those earnings. Credit Suisse is flat, gaining about 0.1%. We'll be hearing from the CEO and the chairman just in the next 30 minutes or so. Wizz Air as well, just speaking the CEO to Anna Edwards on the previous show, currently down at 1.4%. They missed in terms of their first half revenue, 880 million versus the estimates of 896. They do not see a lot of solid demand in the winter. So some concern there for Wizz Air, the second largest low-cost airline here in Europe. Okay, coming up, we are back at COP26 in Glasgow, where clean energy companies set out their plans to tackle the climate crisis. We're going to speak to the CEO of Spanish electricity giant Iberdrola. That is next. This is Bloomberg.
Crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic, and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely, but I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
From New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Welcome back to the Open, 11.5 minutes into the European trading day. What a significant week this is for central banks. The Fed setting out, of course, their determination to taper, and it's a dovish taper. That is the interpretation. Setting out their timeline on inflation and pushing back that rates need to be hiked imminently. Across the Europe Stoxx 600, you're seeing gains of 0.5%. Francine is back with us, finally.
Reunited.
It's also this is very exciting. Put the banks to one side. The fact that we're reunited, that for me is the highlight. There's another big week, of course, for earnings. You've been in Glasgow, now you come back. Earnings and Credit Suisse really front and centre.
Yeah, so we have an interview coming up, which I have to say was extremely enjoyable to do, try and understand the strategy and the dynamic between the chairman and the chief executive. So I know we'll play that a little bit later. And this is after Credit Suisse today kind of surprised everyone, outlaying also their strategy that was meant to come a little bit later on, but came today. And we did learn a lot of news in the release today. This fourth quarter loss probably predicted because of impairments. They're exiting some of the things in the investment bank, but focusing on the wealth management. So really interesting to see the dynamics between the two and exactly what they want want to shape this bank to become.
The future of that important, obviously, Swiss bank and what it means for wealth management as they focus on that. So we're looking forward to hearing from that interview, the CEO and the chairman coming up just in the next 10, 20 minutes or so. OK, let's get back to what's happening on the ground in Glasgow. Francine has just returned. Maria Tadeo is holding the fort for us. The COP26 climate talks continue, of course, to be underway with a procession of world political and business leaders setting out their plans for curbing global warming. Bloomberg's Maria Tadeo, as I say, front row seat to monitor all of the events. Maria, what is on the agenda for you today? Where is your focus?
Well, the focus here is on the Clean Energy Day. And, of course, on that note, we are joined by the CEO of Iberdrola, Ignacio Galán, a huge renewable energy. You don't need introduction. It's a monster company when it comes to renewables. But I have to ask you a question. We're here debating clean energy, but we're also paying so much attention to COP. And, of course, the OPEC. Isn't that ironic that we're keeping almost an eye in the future, but also paying so much attention to oil?
Well, I think we've been for 20 years already trying to change the thing in our company. During these 20 years, we have already closed all our oil and coal power plant. We have already invested more than 120 billion euros in the period. We have already diminished our emission to be, in this moment, 1/7 of the European average of the European one is less than 50 grams. And I think we have demonstrated it's possible to increase the size of the company, to generate electricity with cleaner sources, and at the same time to be already, let's say, business successful. And that is already the COP, to show to the world that it's possible to do the things in different manner, and at the same time to defend the interests of the shareholders and the interests of the society.
But I have to ask you, given the energy crisis that we're seeing this winter and bills going through the roof, the criticism from many is that they argue, renewable energy is not sufficient. It's not going to do the job. What's your take on that?
Well, I remember many years ago when we tried to sell green energy, we were criticized. Even we've been already demanded in the court because they said that the energy has not color. So I think we have already passed through this situation for a long time. So my point is simple, is that the conjunctural or punctual situation cannot be already forced to take a structural decision. So if instead of being so slow in already building new renewables and building new transmission and distribution infrastructures, we'll be already much more agile and we have already made much more, the situation will be not the same one. The fact, in Europe, for achieving the target for 2030, we need to already to make double of renewable than those that we are putting at present. And why? Because we are too slow in the process, bureaucratic process of permitting, et cetera, et cetera. So enough, instead of have the numbers of megawatts we have installed, we have double of those one. This crisis should be much, much less than it is at present.
And just to make it clear, what you're telling me is that we're taking structural long-term decisions based on what you think is going to be a one-off. So you believe that energy prices right now, it's going, of course, through the roof, but will come down. That's your analysis.
No doubt. The fact
they will go down.
It will go down. The fact the future for next year has already half of those we have today at spot. So the electricity price in the spot in this moment is in the range of 200 euros. The prices for next year, the forward prices, is on the range of 100, 120. Why? Because the gas prices has already fallen down, and automatically all the system follow up the same track.
So, Ignacio, the follow-up question to that is, of course, then are governments overreacting? We've seen them put out so many measures and ask for more to try to cap prices. Are they wrong? Are they panicking to some extent?
I think probably they have not really made the proper analysis of the situation. In some cases, I think the information perhaps isn't flowing as agile as it should be. But my point is that we have very good things in Europe that we have to defend. The ETS system, the carbon price, the price for the carbon has been crucial, not only for the European growth, which we have already grown by 50, 60% in the period, but at the same time we've already diminished the emission in Europe by 40%. So it means it's a great system, and we have not to criticize. The second, how the market works. I think the market work we have to work is much more in bilateral contracts. I think it's demonstrated in America. We have plenty of PPAs, long-term agreement. In Europe, in Spain or in Portugal, we have already bilateral contract with most of our customers. So in such a way that you can provide to the customers something based not in a conjunctural situation, just in your basket of cost, which I think that is the normality as is in the rest of the sectors.
Some have said, however, that a company like yours is probably going to make extra benefits because of the situation, should have that cap. Is that a populism?
Well, I will say just the opposite first. That is not true.
Okay.
So our numbers has been published last week, so I think it's easy to be seen. Especially in our retail business, we have already had a tremendous negative effect because we have already sold at fixed price, and we've been forced, in some cases, to produce already a higher cost in the case of the thermic. But what is positive is the thanks of the fixed prices we have already provided to our customers. They have already benefit on the range of 2 billion euros on lower cost instead of already buying at the spot prices, which I think is good. That is a win-win. I think we can already hedge or we can already predict what is going to be the future prices, and we have an instrument for already looking for minimizing this effect, and they can already benefit of that one. And who is not benefiting in the particular case of some country is those ones which are in a bad designed regulated tariff, which if the regulated tariff is based on the spot prices, those which are the lower consumers, those ones which are a very low power installed, which is less than 10% a kilowatt, those ones are already suffering for that one. But the rest is not at all. They are benefiting in 2 billion, which I think that is important.
And some argue it's actually the government's the way they negotiate the contracts, that's the issue. But right before we leave, I have two very quick questions for you. One, you mentioned the ETS system. It works well. Are you in favor of a global one? And then I also want to get your thoughts on India, because they announced a big net zero plan. Is that an investment opportunity for you?
Well, I think in the first one, I think I'll be more than delighted if the rest of the world decide to follow the European track and ETS. That should be great, because that will minimize a lot of problems. They will avoid to have already the carbon border adjustment. They will make a lot of positive things. In the case of India, I think it's a great news. It's a great news because India is a great country. I like very much. I make already in my young times, I built a couple of factories of batteries. No, I know India very well from a long, long time, from the 70s. I'll be more than delighted if they take their direction to have already open opportunity for us.
Well, Ignacio Galán, CEO of Iberdrola, thank you so much for being with us. Always nice to see you. And that's a good headline there. A global ETS would avoid the carbon tax. So, Francine?
Thank you so much, Maria Tadeo, there in Glasgow for us. Now, coming up, the fate of the rate. The Bank of England could become the world's first major central bank to hike since COVID in a knife-edge decision day. It's pretty exciting stuff. We'll have plenty more on that story shortly. This is Bloomberg.
and click on it, we make money. But now there's a big difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. 23 minutes into the European trading day, and we're seeing a little bit of a lift. Certainly the mood after what we heard from the Fed. We did not see the taper tantrum that a lot of the markets were talking about. I have to say, one of my morning must-reads is our John Author's piece saying, look, there was no taper tantrum, and maybe that's not a good sign. I know if you have toddlers, you kind of realize when they're quiet, maybe there's something up as well. But you can see the DAX, the CAC, and the FTSE actually supported between 0.3 and 0.5%. Now, the Bank of England could become the world's first major central bank to hike interest rates since the pandemic struck. With inflation accelerating above target and crucial job market figures not yet available, today's rate decision is on knife edge. Well, Bloomberg's UK economy reporter Lizzie Burdian joins us with the very latest. Lizzie, I mean, if you look at this and if you think about this, it basically depends on two MPC members.
It does. And this is the most exciting day we've had in UK monetary policy for a long time. Markets are convinced that the Bank of England is going to hike rates to 0.25% today. Economists have increasingly been coming round to that view. The backdrop is above target inflation for the past 2 months, a slew of hawkish hints from the Monetary Policy Committee, including the Governor himself, and a more generous than expected budget from the Chancellor Rishi Sunak last week. On the other hand, you've got doves on the Monetary Policy Committee who are saying they need to wait for clearer data on the labour market. They want to see how COVID pans out this winter, whether restrictions are going to be reintroduced. So the bank is going to want to defend its credibility, show that it's not just been crying wolf, but it's likely to be a very close call today.
Lizzie, just break down how the MPC vote could go. And we talk about the different members, the hawks and the doves and the mix, the importance of that, and what we know at this stage.
Well, if we look at the spectrometer from Bloomberg Economics, you can see that you've got 3 doves, 2 hawks, another 2 who could join them, but the power really lasts with the 2 deputy governors, John Cunliffe and Ben Broadbent. We'll get that decision at noon today.
Lizzie, I mean, what does this all mean, actually, when you look at pound and some of the dynamics out there? I mean, what are you watching out for in terms of reaction and also reaction function for the other central banks?
What a surprise it is that it's the Bank of England who could be going first. The question is whether the Bank of England can maintain its credibility, whether it's in control of markets still. We've had such an aggressive ramping up of expectations over the past month. Can we get economists and markets back in line with the Bank of England's messaging?
Okay, Lizzie Burden, thank you very much indeed. Leading out to that all-important BOE decision, our UK economics reporter will be covering this throughout the day for us. Okay, the markets currently, you're posting gains, of course, 25 minutes into the trading session, picking up from the record that was set again across the Dow, the NASDAQ and the S&P yesterday on the back of that dovish taper. You're seeing gains of 0.5% across the European markets, and the futures in the US just holding on to gains of about 0.2%. And coming up, circumnavigating the globe in a yacht to the circular economy. From one to the other, Dame Ellen MacArthur joins us live from COP26 in Glasgow. That is next. This is Bloomberg.
хорошо подготовлены, насколько это было возможно за столь короткие сроки. Это на самом деле эксперимент. Поэтому мне не хочется употреблять такие слова, как страх, боязнь и все прочее. Мне хочется говорить, что это очень волнительно, но одновременно и радостно, потому что, ну, вы же понимаете, как мало людей вообще там были. А у нас есть возможность полететь в космос, и не просто полететь в космос, а сделать там то, что мы умеем по-настоящему хорошо делать на Земле. Это снять кино.
Тоже это не просто, в чем дело-то. У нас же экспериментальный во многом этот проект. Поэтому мы сейчас столкнемся с кинематографическими нюансами, которые мы могли предвидеть отчасти, какие-то, наверное, не могли предвидеть. То есть, несмотря даже на то, что, опять же, все делились с нами там космическим опытом и так далее. Но это опыт, это первый раз. Ну, то есть второй будет проще.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. We're 30 minutes into European trading day, and here are your top stories. While the Fed starts tapering, Jay Powell says the central bank will start trimming asset purchases this month, but he's in no rush to raise rates. It could go either way at the Bank of England. The central bank has a knife-edge choice over whether to hike. We'll speak to Governor Andrew Bailey later today. And Credit Suisse plans to exit prime services. The Swiss lender looks to lower risk after the Archegos and Greensill scandals. We'll bring you our exclusive conversation with the chief executive, Thomas Gottstein, and the chairman, Antonio Horta Osorio. Now, first, the markets, almost record highs. Once again, Tom, they're on a tear.
Yeah, you have the certainty of the taper now, but the Fed, Jay Powell, giving himself and the FOMC that flexibility in the months ahead to respond to the inflationary pressures. They readjusted and reframed the concept of transitory. The market's still pricing in 2 rate hikes by the end of next year, but Jay Powell saying the conditions have not yet been met, just reminding investors that those conditions are more stringent. In terms of the handoff then, because you had another record close, and it wasn't just the S&P and the Dow, it was also the NASDAQ and Russell 2000 well. The handoff very positive to what we're seeing here in Europe. Gains of 0.5% across the benchmark. In terms of the DAX, gains of 0.3. Bear in mind, it's still an important day for earnings. We've had Credit Suisse, SocGen, Commerzbank was a big win. The last time I looked, that stock was up more than 6%. That is fueling the gains, partly, that we're seeing in the DAX, up 0.3%. The CAC 40 is also positive by 27 points, and the FTSE 100 as well, up 0.2% as we look ahead to that BOE decision. By the way, when it comes to Europe, the ECB's Christine Lagarde, again yesterday, trying to make the case that a rate hike and the conditions there have not been met for 2022, pushing back against the market expectations, essentially saying it is not on the table. Let's switch over and have a look at how things are breaking down sector by sector. You have oil prices in focus again. You're seeing some gains across WTI and Brent ahead of OPEC+. That is playing into the energy sector, gaining 1%. Real estate is also higher, but as is technology. Banks also gaining on the back of these broadly more solid results. At the bottom of the list, you've got chemicals down just 0.1%, as is construction materials also. But broadly, it's a positive picture here in Europe on the back of that Fed decision as we look ahead to the BOE and economists 50-50 on whether or not we indeed do get a rate hike from the British Central Bank. Francine.
Tom, we'll have a lot more, of course, from central banks. And on Inflation Watch, we have the Bank of England. Don't miss our interview after the MPC decides with the Bank of England Governor Andrew Bailey. That comes at 4 p.m. UK time. Now, let's get back to the UN Climate Summit, still happening in Glasgow. I hope it's warmed up since I left yesterday. A number of the world's leading NGOs and charities are there, contributing to the debate and, of course, contributing to negotiations, tackling the climate crisis, while Maria Tadeo joins us with an interview. Hi, Maria.
Yes, good morning, Francine. And what a joy. We're here joined by Dame Ellen MacArthur. You're CEO of your foundation. Too, you are a very open advocate for climate issues and the circular economy. You told me off camera you've been here for 3 days and you're more optimistic now than you were on Sunday. Why is that?
I really feel that there's a dialogue, a very strong dialogue with business and policy now. You know, COP has been about countries and pledges and targets, and actually the economy is delivered by business. And to see business playing such a role and waiting for that level playing field and that understanding of where we're trying to get to, I feel that that dialogue is absolutely key.
And the feedback that you get is that business this time, it's for real. It's not just about the looks or because it's nice to be green, but you get the impression that there's real money now on the sidelines that wants to be executed.
The money's there. It needs to be addressed as to how we get it to the places it needs to go. And I think that's really interesting. There's a huge conversation, and has been for many years, around the switch to renewables, which is obviously vital to try and reach those 1.5 degree targets. But that's 55% of the challenge. 45% of the challenge is how we make and use things, including food, you know, agriculture, mobility. It is the economy itself. If we can switch that towards circular economy, if we can get businesses orientated towards that, not only do we have massive carbon savings within that remaining 45%, but we also start to address issues such as biodiversity loss, such as regenerating natural capital and agricultural land. Then you start to see the economy solving the problem for you, rather than slowing down the transition to the low-carbon economy.
And, you know, what you make it's actually a good point. You know, you say it's not just about renewables or like future cleaner energy sources or the energy and green economy, but it's actually using what we have now in a different way. I wonder, however, would you say that business, but in particular the consumer, are they aware? Do they have all the information that they need when it comes to a circular economy? Because the criticism is that sometimes they don't get it.
No, absolutely. No, they don't. And what we do at the Foundation is we mobilise system solutions at scale. So our job is to try to change those systems to enable those consumers to have the choices that can make a positive contribution to the challenges that we face. And they're not there right now. If you take food, what if you could walk into the supermarket and you buy an item of food that says, this food is nature positive? Because the company that sells it or the supermarket that sells it is procuring food in a different way. They're procuring food from farmers who have regen ag, who are building natural capital, who are storing carbon in the soil. Then you're making the world a better place through your choices. You're not thinking, what will have the least impact? You know, what can I choose that will have the least impact?
And there you said something that to me is key. You know, when you want to buy sustainable or you want to be a sustainable type of customer, you know, you want to have the information that you need. I know based on my own personal experience, sometimes it's very hard to navigate that space. Is it perhaps because we need benchmark information, we need a standards of reporting that is different and is also much more simple, streamlined?
I think we need to know what success looks like for the global economy, and that sounds like a bit of a vague thing to say, but you know, within a circular economy, you eliminate waste and pollution, you circulate products and materials for as long as possible, and you regenerate natural capital. If you run the economy in that way, from the design phase, you design out waste and pollution. You reduce plastic packaging pollution because you make all plastic have value. You have regen ag because you're rebuilding natural systems. Through those three principles, if you run that on renewable energy, you have an economy that can run in the long term, which delivers for the consumer. Because the choices out there play a part in the solution space of the global economy, and it's economically beneficial for the global economy as well.
The catchline of this conference does appear to be Greta saying no more blah, 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 more action. Do you agree with that? Or in fact, you know, you do need some talk still, and we talked about educating the consumer and making it simple. Is that still needed, however?
I think the solutions need to be provided for the consumers. That's where we sit. I think that's where there's a massive opportunity here. The consumers can't make the right choices today because they're not there. Many are, but many really aren't. The whole economy needs to shift to provide those solutions for consumers. Whatever they want to call them, it rebuilds the economy. They have remanufactured vehicles, food is grown in a different way. Then the economy plays a part in the solution, and the consumers don't have to understand it. They just have to act in the economy as they do today.
And a lot say that it's not the consumer, but it's the companies that need to make it simpler. Well, Damon MacArthur, thank you so much for your time. Always appreciate it. And, you know, good luck in your final day of COP, I believe, right?
Thank you very much.
Thanks so much. Tom?
Maria, thank you very much. Indeed, interesting conversation about the circular economy and the need for that. Let's get the Bloomberg First Word news now. The UK government has backed a move to overturn Parliament's rules on sleaze after a member of Boris Johnson's party was found guilty of paid lobbying. Lawmakers voted narrowly in favour of setting up a new committee to examine the ruling against former Minister Owen Paterson and determine whether those accused should be given new rights. Paterson says the probe was flawed and denies wrongdoing. Phil Murphy has eked out a win for the Democrats in the governor race in New Jersey. Associated Press says Murphy had gained 50.2% of the vote, with 98% of precincts reporting. The close race in a state easily won by Joe Biden is likely to energize the Republicans ahead of next year's midterms. Negotiations to revive the 2015 deal on Iran's nuclear program will resume in Vienna on November the 29th. It ends months of speculation over whether world powers and Tehran's new government could commit to resolving their long-running standoff. It's the first hard signal since June that there may be a horizon for the removal of sanctions on Iran and its return to oil markets. And it's Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists, analysts in more than 120 countries. Fran.
So should we have a quick look at what the markets are doing? They're actually hovering near record highs. I mean, it's pretty incredible. After we heard from the chair of the Fed yesterday, of course, Jay Powell, talking about tapering, this was widely expected, which is maybe why the bond market didn't reprice anything. But if you look at global stocks across the board, I don't know whether we do have a market board. I would love a market board. It's always great to talk about the markets when you actually see if there are any moves or not. Global stocks hovering around these record levels. Again, look, the Fed was so very well flagged that it's not moving much in the market. So they also said they will be patient about raising rates. And then the other thing I'm also looking at is a Treasury yield curve that you can see actually on your screen, remaining steeper compared with before the Fed decision. So we'll have plenty more, of course, on that throughout the day. Now, to another interview, and this was Credit Suisse. We did hear, Tom, and I'm extremely excited to bring this interview to you. So we heard about strategy from Credit Suisse. We heard about earnings. I just did an interview with the chairman and the chief executive, and the fact that they were together is because the chair has a much more prominent role in Switzerland, so it's a different role to what it would be here in the UK and the US. And I started by asking them exactly, what the strategy forward is, and we also talked about earnings. Let's listen in.
I fundamentally believe that at heart, every banker should be a risk manager. This is really important. And obviously, when you want to, as I said before, you want to keep the fantastic entrepreneurial spirit, client attention, agility, innovation, working very well together across silos that all people at Credit Suisse have. At the same time, we want to elevate the risk management and a clear culture of accountabilities and responsibilities. And that is a process that takes time, and that is a combination of different levers. It starts by leading by example at the top, as we are doing. It goes on by attracting and hiring the right people for the bank, the right role models that you want young people at Credit Suisse to aspire to be. And we have hired David Wildermuth as CRO, Joanna Rutherford, CTO. Internally, we have promoted Rafael Lopez Lorenzo, our Chief Compliance Officer, Christine Graff, Head of HR. We brought Axel Lehmann to be the Chair of the Risk Committee, Juan Columbus, member of the Compensation and Risk Committee. So this is an example of what you also have to do in order to change the culture and have the right values at the top of the bank. And third, strategy. So the strategy itself, as I told you, is a strategy which has much lower risk going forward, providing the appropriate returns as we shift capital into the higher returning businesses. And then you have, final point, you have the risk appetite, which the board will set as a consequence of the strategy, and you will also have the right incentives to complement the whole package that will progressively, to your question, take risk management upwards in the organization and will be absolutely gone through all the ranks of the bank.
I want to come back to risk in a second, but Thomas, when you look at the investment bank, it's a more conservative investment bank. What does it mean for actually competing in the big league?
Well, we have very strong businesses in the investment banking area, and we have made some tough choices, like exiting Prime. But at the same time, we have strong businesses like in M&A capital markets, in credit, and in other areas. So, as you also saw in the third quarter results, we had very strong increase in revenues in these areas, including in also equity derivatives. So our plan clearly is to have an investment bank which has less capital, which is much more connected also with the wealth management area, and has also continued strong global franchise. And that's why we have also decided to have one global investment bank. So we included not only Asia, but also Swiss Universal Bank. And this is very important for us because as part of our strategy to have strengthen the bank, to simplify many of our areas, but also to invest in growth. And we want to invest in the investment bank, be it in capital markets, be it in M&A, be it in all the other core areas.
How do you avoid the slippery slope of actually getting smaller?
Well, this is something that we have, I think, managed very well. If you look at our 9 months numbers, we are actually, despite having done already a significant reduction in capital in the second quarter, we are up significantly in terms of revenues, and that continued in the third quarter. And it's clear that the exit of Prime will have a short-term restructuring effect, but the areas where we want to focus on are growth areas and where we see competitive advantages, where we have strong positions, and where we continue to invest. And I think together with the connects with the wealth management area, whether it's in trading, whether it's in M&A capital markets, we have significant upside. And last point, it's really also the areas in Asia where we have seen a bit of a slowdown, but we, in the mid to long term, we continue to see strong potential to grow further.
Does Switzerland, Antonio, really need two large banks, both on the wealth side and on the investment side? Does it not make sense to figure out a merger?
Well, those rumors have been going around for some time. I mean, I think it's very clear from the strategy we are announcing today that Credit Suisse has all the possibilities, all the capabilities in order to be a really successful bank, both, as I said before, to clients, which it has always been very focused on clients, and rightly so, but also for shareholders. And the strategy we are announcing is absolutely in the unanimous opinion of the board, where we came to quite quickly, actually, because we are announcing it, as you know, a bit ahead of what we thought. This is the right combination in order to deliver value for both our clients and our shareholders. That has been our absolute focus as a board and as an executive board.
I would add, you know, the financial marketplace is a stronger one with two players. It's like in academia, it's good to have ETH and EPFL, or in football, La Liga in Spain with Barcelona and Real Madrid is a stronger La Liga. So I think it's good for the financial marketplace.
Archegos, Greensill, is that it for the bad news for Credit Suisse? Can you really move on from those?
Well, we have made a very significant effort of cleaning and addressing those issues, as you know, and the Archegos issue has been addressed, and we have published fully a report which shows that we learn about what happened, and we're very transparent about it. Greensill, we are still working on it, and we have our investigation going on. We are also obviously trying to show and recover all the money possible for clients in the meantime. And we also did some recent settlements, as you saw. Yeah. So this is also a process, but I can tell you we are much better than we were 6 months ago, and we will absolutely relentlessly pursue the closure, when appropriate, of these issues going forward. And the lower risk bank that we are creating should absolutely avoid this type of issues happening again.
How do you keep morale at staff level high after all these blows?
I think the staff was clearly waiting for the strategy. I think it will really liberate people. They have clarity now. What is the strategy? What is the structure? And also they will take away a lot of positives from the Q3 results, which were, as I said, very strong. We have a strong balance sheet. We had very solid earnings across wealth management, across investment banking, and asset management as well. So this will help certainly people now to get to the next level.
So we're doing this interview together. So do I take from that you have full confidence in management and in Thomas Gottstein?
Well, if that would not be the case, we'd not be doing it together, I guess.
I mean, is there anything that actually, is there a message for investors in that? Is there someone to blame because of what happened in the past at Credit Suisse?
No, the message for investors is very clear. When we announced we would do the strategy review, I was very clear that it would take some time. And the reason why it would take some time, I want to be very clear about it, is because if we were going together, me, the board, Thomas, the executive board, to set out a vision for Credit Suisse for, let's say, 10 years.
It had to be the right one.
It had to be the right one, absolutely right. And so it is worth investing, actually only 5 months, less than we thought, to set out a vision. Why? Because I really wanted the process to be completely inclusive, everybody to be heard, all points of view to be considered. There were no sacred cows. We brought all scenarios, pros and cons, revisited them again, and when we thought and we felt that we're unanimously behind the strategy, which was a bit sooner than we thought, we have announced it. That was the time for debate.
Right.
Now it's the time for execution. And execution is as or more important than the debate and the strategy.
With the current team.
With the current team led by Thomas. And it is really important. I mean, strategy in the end is actually simple to say, but difficult to execute. You need the right direction. I mean, if you do a huge effort in the wrong direction, that's really not useful. So we believe absolutely unanimously we have set out the right direction. Now you need the right team with the right people in the right positions. You need a team working well together so that the team itself is worth more than the arithmetic sum of the parts. And thirdly, you need relentless execution, quicker than peers, to create additional competitive advantage. And now that's where this new phase starts.
Thomas, if you
I
could
would
go
also
back
like
in
to
time.
add, you know, all the appointments we made, I always made the recommendation to the board, and Antonio and I, on each of these appointments, we were absolutely aligned, and it was a joint recommendation.
If you could go back in time, is there something that you would do differently?
I think we did a lot. I mean, starting with some of the legacies already in the fourth quarter last year, and if I look back when I started in February 2020, 3 weeks before the pandemic started, I was very proud that Credit Suisse, under my leadership, actually led the COVID SME program in Switzerland. 120 banks participated. Credit Suisse took the lead on that. I think that was a very strong start. And we achieved a lot also in terms of reorganizing some of the businesses in Switzerland.
But brutal for shareholders.
Well, 2020 was, if you look back, the first 12 months was actually a quite solid progress with respect to the overall COVID situation. But as I said, we already started some of the legacies in the fourth quarter. And it was now, obviously, due to the two events we had in March with Archegos and with Supply Chain Fund, with the new chairman coming in, the right moment to sit back, to look at the strategy. And I think we have achieved a lot now in the last 6 months, where we have gone as one team, the board of directors led by Antonio, the executive board in several iterations. We came to a joint recommendation on the strategy, on the structure, and we have done that faster than originally planned. So we are now in a position really to have clarity on the next few years.
Do you have to pay staff more to keep them happy?
I mean, we absolutely want to pay for performance and in a competitive market. And if we create economic value, it's absolutely clear that we'll be able to do that going forward.
Have we reached peak M&A?
Well, M&A is following capital markets, equity markets. There's a strong correlation, and obviously the GDP growth. And we've seen a big rebound this year because of the post-COVID GDP rebound. And I think at the moment CEOs are very much active in M&A, and I have not seen any slowdown at this stage. So I think the M&A overall situation continues to be very productive, with also low interest rates. So from that perspective, M&A continues to be very strong.
Antonio, did you realize it was going to be so challenging before you took the job?
Well, not really. But I have to say that when I accepted in December last year to take the chairmanship of Credit Suisse, I already thought, given the succession of small but a long list of items that were legacy issues at the time, that there was something that should improve in terms of risk management. Obviously, when Archegos and Greensill happened, they were absolutely beyond what I thought would be acceptable, and well beyond, as I said in the AGM, the normal ups and downs in companies. And therefore, we had to address them quickly, and that increased internally the sense of urgency. So obviously, those were really two unacceptable events, as Thomas also said, but that had, on the other hand, the effect that it created this sense of urgency internally and the clear understanding throughout the organization that we had to change that, and we had to make sure that this type of things does not happen again.
What did you find trickiest in dealing when you saw this and actually seeing the strategy and figuring out what Credit Suisse would become?
Well, it's not really a matter of what I found trickiest, but when you are in a situation of urgency in the short term and at the same time you want to set, as we discussed, a long-term vision for the company, you really have to a more complex situation, because you have to deal with the short term, as Thomas was leading the bank day to day in an urgency situation, and at the same time we had to do this methodic, thorough process, executive board, about seeing all scenarios and setting the direction for the bank. So this combination of both being very much on top on the short term, but with the eyes on the stars, was a really important combination. But I think we came to a quite good outcome. And I think, as Thomas says, that it is great for our employees. We have clarity now, and now it's all to the execution phase.
Thank you so much, both of you, for joining us today.
Thank you very much.
Thank you.
Thank you.
Well, that was our exclusive conversation with the Credit Suisse Chief Executive Thomas Gottstein and the Chairman Antonio Horta Osorio. What was interesting, Tom, first of all, they seem to be on the same page, and this was really a testament, because there had been, I don't know if it's rumors, but the Chairman is so much more powerful actually in Switzerland than they are here. And he came in, as he says, he was really surprised what to find. And you were wondering, at least I was wondering, what the relationship was like with management. Could they have dealt with it better? Probably. Could they have acted quicker? Maybe. But it was clear in that interview that, the CEO has his support.
So two key things that stood out for me was that unity, as you say, between the chairman and the CEO, but also that messaging that they kept pushing, which is now is the time to execute. So they've taken on board the lessons learned from Archegos and Greensill. Now they want to move forward with a restructuring and execute on that.
Yeah, I mean, I have to say it was, again, it was tainted on their side with optimism. We have to see what the share price does. I guess they're giving them a little bit of time, so we'll try and also get a hold of some of their biggest shareholders. It has been brutal for shareholders in the last year and a half. 55 times the word risk came in the 108-page report. And again, they need to get risk under management if we're not going to see more ugly stuff crop up.
Shares, by the way, down year-to-date 13%. Of course, March is when it fell off on the back of those scandals.
Yeah.
Currently flat. They've just pared some of their losses earlier. I was looking, it was down 0.2%. Since we've been listening in this interview now, unchanged at Credit Suisse in terms of the stock. But year-to-date, down 13%.
And then the big story, the BOE, to hike or not to hike?
Yes, that is where the focus switches to after the Fed's decision on the taper, of course. Let's get the Bloomberg business flash now. SocGen, talking of banks, has extended a rebound in equities trading to beat the top Wall Street banks. The Paris-based lender reported a 53% increase in trading stocks and derivatives. It also saw record revenue from financing and advisory and lower provisions for bad loans. ING has beaten forecasts in the third quarter after it set aside less money for doubtful loans. Net income at the Dutch lender rose 73.5% in the last 3 months. ING reported strong fee growth, which offset margin pressure from negative rates in the euro area. That is your Bloomberg Business Flash. Francine.
Now, we have quite a lot coming up today. Of course, our interview with the Bank of England Governor, Andrew Bailey. This is after we get that knife-edge decision from Monetary Policy Committee. We're getting a couple of interesting notes. SocGen, Kid Jukes, I love his notes because they're also always sparse with a bit of humor, saying the BOE may not hike today, but I don't much like cable either way. So, of course, we're looking for what it means for sterling.
Cable also, by the way, down about 4% since May. So we'll see, of course, how this plays out across the asset space. We're going to have that interview. We're going to have that crucial decision. 50-50 is how the economists are calling it as to whether or not the Bank of England becomes the first major bank to hike since the pandemic. That is it for the European Market Open. Surveillance Early Edition is up next. Your markets in Europe gaining 0.5%. This is Bloomberg.
much stress is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's as simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked of other things. Now that's moving to become mandatory.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, you know, what the challenges with getting people back into the workforce.
We clearly are setting ourselves up for a policy error.
Scott really hit the nail on the head. The spillover effects of that and containing, if they have to pivot more dramatically and do this more rapidly, because they started, in my own opinion, a little bit late, that could be very destabilizing.
I don't think that we're behind the curve. I actually believe that policy is well positioned to address the range of plausible outcomes.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, November the 4th. Our top stories today. Central banks at center stage. Stocks are near record levels after the Fed decides to taper stimulus and says it will be patient about raising rates. We'll hear from the Bank of England today. A tale of two banks. Credit Suisse expects a loss next quarter to cap what has been a year to forget. Meanwhile, Societe Generale in France tops estimates as equities trading rebounds. And the Democrats' election hangover. President Biden says the defeat in Virginia shows why it's pushing for a vote. Kaylee, good morning. Good morning, everybody. Welcome to Bloomberg Surveillance, the early edition. Here in Europe, we're playing catch-up on that later in the day rally we saw on Wall Street yesterday, Kaylee.
And it was a broad-based rally, Anna. The Dow, the S&P 500, the NASDAQ, and the Russell 2000 all hitting record highs for the second day in a row. And you saw some follow-through buying as well in Asia overnight. Broadly, a green day for equities. Both Japan and Chinese stocks were higher by about 1%. With currencies, it was a bit more mixed. You are seeing outperformance from the likes of the Chinese yuan. And just pay attention to the bond market, which I know where is Matt Miller's attention has been really for the past several weeks. In Australia, we saw the 2-year yield going back up 7 basis points. So it continues to be a dance between what central banks are saying about inflation and about rate liftoff and what the market thinks. And of course, that fed into the Fed decision yesterday. Yes, they tapered. We all knew that was likely coming. But Jerome Powell really trying to separate the reduction in asset purchases from eventual rate liftoff. The question is, does the market buy it? Of course, we got the record highs after the Fed decision yesterday, and you are seeing equity futures in the green this morning, up about 4 points on S&P E-minis. But in the bond market, interesting action. Of course, you saw the 10-year yield rising 5.5 basis points after the Fed yesterday. Today, though, we come back in by about 3 basis points. We're at 157.53 on the 10-year. Oil rebounding after 2 days of losses. Of course, we are awaiting that OPEC Plus decision. The question is, do they stay the course with 400,000 barrels a day in output increases for the month of December, or do they cave to the political pressure coming from the U.S.? Right now, WTI at 81.35 a barrel. And then just a quick check on Bitcoin, down 2% today, Matt. We are trading at 61,500 or so dollars, Matt.
All right, so Bitcoin still above the $60,000 level, and we see stocks rising across the board in Europe as well this morning. Everybody's in the green. Of course, you see Poland and the Iberian Peninsula doing a little bit better than the rest of the continent. Nonetheless, we see gains there, and they're driven in part by a drug maker deal in Switzerland. Novartis is selling its stake in Roche back to its crosstown rival for $20.7 billion. Roche gets to buy the stake at a 13% discount, and that's why both of those stocks are up. Very heavily weighted stocks. We're talking about the third biggest and fifth biggest stock in the Stocks 600 index. So when they move, they tend to move the index as well. So are the big banks, obviously very heavily weighted. We see big gains at ING after they said their business is returning to pre-COVID levels. SocGen had a 53% gain in stock and derivatives trading. Commerzbank said they're going to make money this year. It's all about making money, right? So that's nice. And Credit Suisse actually coming up a little bit, even though they said they're going to have a loss in the fourth quarter. They had a 21% drop in profit in the third quarter because they've had a number of issues, both financial and legal, relating to Archegos, as well as some other things. But it looks like investors are happy that they're getting everything out, all the dirty laundry in the kitchen sink, helping Credit Suisse to come back to little change. I also want to point out Aston Martin is showing some big gains today. They've had really good sales, strong sales of the DBX. It's an SUV that I think Anna would look really good in. It starts at $180,000, and actually I've put together a few on the configurator online. I get to a much higher price there, but it's much cheaper than the Valkyrie. They're coming out with their Valkyrie hypercar. It's a $3 million, basically it's a Formula One car for the street, and investors are pretty psyched about that.
Very nice. Very nice. You have a much more glamorous impression of my life in its reality, Matt, than is the truth. But it's nice that you think of me that way. Yeah, that's what you call some pricing power, isn't it? A $3 million car. Let me just mention, as we're tracking the central bank narrative as it moves around the globe today, let me just mention the Norges Bank out of Norway. They're saying that the economy suggests appropriate, they're leaving their key rate unchanged at 0.25%. That is the important point to mention. And it says that the policy rate will most likely be raised, though, in December. So that's some clear guidance coming through from the Norges Bank. Now, a look at what else is ahead today. And we don't leave the central banking narrative there. Bank of England is up next. That rate decision, 8 a.m. New York time. Markets are pricing in an interest rate hike, even as economists remain split. Don't be fooled by the time difference. It's a little bit different to usual this week, isn't it? OPEC Plus members meet to discuss oil policy. President Joe Biden has increased pressure on the cartel to combat high oil prices, blaming it for inflationary pressure at home. As Kaylee was saying a little bit earlier on, we see oil prices actually moving a little higher, though, but they have been falling in recent days. And it's Clean Energy Day at the COP26 summit. That's as Joe Biden demands more action on climate, but also more oil from OPEC. We'll figure that one out. Now, bank earnings continue to come through, as we've just been hearing from Matt. He's taking you through some of the moves there. With both Credit Suisse and Societe Generale reporting today, Credit Suisse warned of a net loss in the current quarter. Meanwhile, SocGen extended a rebound in equities trading to beat the top Wall Street banks. We spoke to both the SocGen CEO and the Credit Suisse chairman this morning.
When I accepted in December last year to take the chairmanship of Credit Suisse, I already thought, given the succession of small but a long list of items that were legacy issues at the time, that there was something that should improve in terms of risk management. Obviously, when Archegos and Greensill happened, they were absolutely beyond what I thought would be acceptable and well beyond, as I said in the AGM, the normal ups and downs in companies.
We have overall a very strong performance on the capital markets, plus 8% compared with last year, driven by a very strong performance of the equity business.
Let's get more on the banking sector. Bloomberg's Danny Berger joins us. And Danny, when you look at the performance of the banking sector today, actually really decent for the sector as a whole. Yeah. It's Credit Suisse that sort of stands out for the wrong reasons to the bottom.
Right. Well, Credit Suisse itself is even able to gain a little bit. Perhaps there's some hope that this big restructuring means that they can leave some of the past behind. Now, the results themselves, very mixed for the third quarter. Really what sticks out is the fourth quarter, this current one, that they are expecting a loss. A lot of that has to do with impairment charges. There's scandals and there's restructuring. Now, it's going to be all about this restructuring that investors are concentrating on. This is something Bloomberg reported on earlier, but really confirming that what they want to do, what Credit Suisse wants to do, is pull back on their more risky, their more volatile businesses. For that reason, they're cutting back on investment banking by 25%, and that includes the exit of prime brokerage. So where do they want to lean on? They want to lean on where they might get some structural profitability, and that really is in their wealth management division. They're consolidating it and putting it into one big global business. But I think the thing that encapsulates their earnings the best, this is mentioned on TLive Go, on our TLive blog, that in their Investor Day report, 108 pages, the word risk was mentioned 55 times.
All right, so maybe they need to up that count. In terms of SocGen, they had a 53% gain in equities and derivatives trading. They had record revenue from advisory and financing. They had lower loan loss reserves. That's something we see really across the spectrum.
Yeah, and in some degree, some of those results were better than Wall Street. You mentioned the 53% gain in equity trading. Wall Street, the average was something like 35. So this is kind of a more positive story, of course, than Credit Suisse, more similar to what we saw from Wall Street. Now, this is because SocGen, for its part, had made some changes. They had changed after the pandemic, saw some really steep losses because of some of the derivative bets they had. So this was also more about dialing back on risk, getting to more of those reliable parts. So it was equity trading that did well. It was advisory. Even their French retail business was pretty strong. The only thing that they saw losses on was fixed income. I should just note the other little tidbit of surprise within these results is this last point here. Their finance chief is leaving, going to a private equity firm that tends to be that bank to PE pipeline, and taking his place is Claire Dumas, who's the current deputy CFO.
All right, Danny Berger, it's good to have you back. Thank you so much. Well, let the tapering commence. The Fed announced plans to start reducing asset purchases yesterday, as expected. But Chairman Jerome Powell stressed that doesn't mean interest rate hikes are imminent. He says he won't consider liftoff until the labor market gets stronger, even though inflation could run hot for months.
I don't think that we're behind the curve. I actually believe that policy is well positioned to address the range of plausible outcomes, and that's what we need to do. I do think it would be premature to raise rates today. That's not. I don't think that's controversial. Certainly, I don't know anyone arguing for that today. And the reason is that there's still ground to cover to get to maximum employment.
So, Anna, Jerome Powell is pushing back, yet the market remains where it was before the Fed decision. They see liftoff mid-next year. So you get the pushback that the market doesn't really buy. The same thing goes for the ECB and Madame Christine Lagarde yesterday, and it raises a giant question mark for the BOE today.
Yeah, and one of the uncertainties around the Fed is the labour market, and big uncertainties around the labour market hang over the Bank of England as well, because the BOE will decide today whether to deliver its first interest rate hike since the pandemic. This is a divided monetary policy committee as it grapples with spiking inflation and slower growth. Let's get now to Lizzie Burden, Bloomberg's UK economy reporter. Lizzie, good morning once again. So the new Bank of England chief economist Hugh Pill has said that this decision is finely balanced. Where does that leave us? Are the markets expecting the same thing as economists? Do we see that kind of division? What is the expectation for today?
They're not. Markets are convinced that the Bank of England's going to hike rates for the first time since the pandemic crisis to 0.25% today. But economists are only increasingly coming on board with that thinking. The backdrop is higher than target inflation for the past 2 months, a slew of hawkish hints, including from the Governor Andrew Bailey, and a surprisingly generous budget from the Chancellor Rishi Sunak last week. So the MPC is really going to want to defend its credibility, show that it's not just been crying wolf, but at the same time you've got doves on the committee who will be wanting to wait for clearer data on the labour market, who will want to see how COVID pans out over the winter. So really it will be a very close call, whatever the decision is.
All right, well, just under 3 hours to go until we do get that decision. Thank you so much to Lizzie Burden, Bloomberg's UK economy reporter. And in New Jersey, Democrat incumbent Phil Murphy has eked out a win in a surprisingly close governor's race that's likely to energize the Republicans ahead of next year's midterms. That, of course, follows a bruising defeat for the Democrats in Virginia, which President Biden says shows urgency for his party to get his economic agenda through Congress.
I think we should have passed before Election Day. People want us to get things done. They want us to get things done. And that's why I'm continuing to push very hard for the Democratic Party to move along and pass my infrastructure bill and my Build Back Better bill.
Jack Fitzpatrick, Bloomberg government reporter, joins us now from Washington. So, Jack, Nancy Pelosi would still like to see a vote happen this week, but it seems like there's still major question marks around paid family leave and also that SALT cap.
Yes, those are the two outstanding issues now. And keep in mind, even as House Democrats move toward a vote, if there are any outstanding issues, it's going to end up being sent back from the Senate. So a House vote in the near term probably would not be the final House vote. But the big issues, as you mentioned, are the state and local tax deductions. There's a proposal right now on how to address that. And actually, Senator Bernie Sanders wants more limitations to get that a bit more strictly focused on people making less than $400,000 a year. And the paid family leave provision floated by House Democrats does not appear to have support by Senator Joe Manchin. So there are some outstanding issues. And again, if there's a House vote and there are outstanding issues in the Senate, it could be sent back for another House vote after they have that bicameral conversation.
It's interesting how Sanders went from he doesn't want the SALT deduction going to billionaires to people making $400,000 a year. There's a huge gap there that I'm not sure if he's aware of. President Biden also keeping up the pressure on OPEC Plus. He wants them, it's interesting, coming back from COP26 where we're trying to make the world a cleaner place. He wants them to pump more oil, right?
Yeah, that's an area where there has been criticism, and I'm sure will be more criticism from Republicans on the simultaneous back and forth from the Biden administration looking to, at least in the long term, limit fossil fuel production in the U.S., but looking to OPEC and other major oil producers to increase in the near future, blaming that for inflation and actually going to the sort of the sidelines of the international conferences they've gone to. The Secretary of State spoke to his counterpart at the UAE about this. They really are keeping the pressure up, but politically here at home, that's a line that Republicans are hitting them on more and more.
Yeah, we hear from OPEC Plus, the U.S. is pushing for 600,000 barrels a day. OPEC only wants to do 400,000. We'll see what they do decide at that meeting later on. Thank you so much to Jack Fitzpatrick of Bloomberg Government. And now let's get back to the equity market and take a look at some stocks moving in pre-market trading here in the U.S. One bigger mover to the upside is Qualcomm, which of course is the biggest maker of chips for smartphones. It delivered an upbeat forecast. Yes, they're dealing with supply constraints, but they're working their way through them. And that actually may signal the worst of the semiconductor shortage is nearing its end. That stock is up 6.5%. To the downside, though, is Roku. They missed in the third quarter, gave a disappointing forecast. The company blaming, shocker, supply chain issues, and that stock is down about 7%. And one non-earnings related mover is Allbirds, of course, the sneaker company. I myself, full disclosure, have a few pairs of these. It made its public debut yesterday, and the stock nearly doubled from its IPO price, up 93%.
What are
the
they?
gains, they're really comfy sneakers.
Ah.
Yeah, I'm not going to recommend buying or selling that stock, but I do like the shoes. So that stock is up about 0.4%, Anna.
I'm not sure how woolly footwear would look on set in a TV studio, but maybe we'll give it a go one day when we get a little tired of these ones. Thanks for that, Kaylee. Coming up on this program, global stocks near all-time highs after the Fed decision. More on what to expect from today's price action and on the Bank of England decision. We'll speak with Christian Keller, Head of Economics Research over at Barclays. Plus, it's one of the world's largest reinsurance companies. We'll speak with the CEO of Munich Re live from COP26 in Glasgow. What does decarbonisation mean to Joachim Wenning at Munich Re? This is Bloomberg.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. I think.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of. Look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
This week on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. This week on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, I don't want to offend anybody else, but Ven Ram is my favorite contributor on the MLive blog. And he put this chart together today to help us understand what interest rate increases here in orange mean for an increase in the 2-year yield, which is here in blue. This is back in the 90s. This is in the early 2000s, before the financial crisis, and this is from 2015 to 2018. But basically, an increase in the interest rate for the Fed, 1 point, means about 0.71% increase in the 2-year yield. Ven Ram joins us now, currency and rate strategist from the MLive blog. Ven, what do you expect us to see in terms of the 2-year yield here in the U.S., considering what we've seen in terms of gilts with the live meeting for the BOE today?
Morning, Matt. Absolutely right. I mean, in terms of gilts, we have seen a massive imperious sell-off in gilts. We were like 6 basis points at the end of July. Now we are 70 plus basis points. And I expect that magnitude of sell-off to reflect in treasuries going into next year because of the chart that we just showed. And you know, at the moment, the 2-year treasuries are around 45 basis points, give or take, and I expect that to go up to 175, 145, or thereabouts, depending on how steep the Fed cycle is. And I think that the markets are kind of underpricing the prospect of a Fed rate hike. We've already seen the money markets gravitate towards the possibility of 2 interest rate hikes next year. But if you look at the Treasury curve, the front end is sitting pretty smug. And I think that smugness will give way to alarm next year as the Fed begins to accept the possibility and acknowledge the possibility of rate hikes.
Okay. Ven, good morning to you. How certain are you about what the Bank of England is going to do today? We hear it described as being on a knife edge, a very live meeting. What do you think is going to be the outcome of this, and what will the pound do in response?
Morning, Anna. I think that, you know, it's a very close call. Obviously, it may be 5-4, maximum 6-3. It's going to be a pretty close call. Whether or not they will go this month, it's for certain that we will have a rate hike by the end of the year. There is no question about it. So it's just a question of a few weeks. Regardless of what the reaction is, what they actually do today, and I think that I think sterling will not be a key beneficiary. Why do I say that? A, because the broad dollar is in the ascendant, and correlations that have passed, and that's available on the terminal, suggest that the pound is not going to be a beneficiary. There are rotational flows, and those rotational flows seem to be headed into the Australian dollar and the New Zealand dollar, because, as you know, the RBNZ is on a very steep rate trajectory.
Thanks so much, Ben. Good to speak to you, Ven Ram, from our Bloomberg Markets Live team. Thank you very much. Yeah, strong dollar as we head into that Bank of England meeting, a little bit of weakness in the pound. And for more market analysis, check out MLIV Go on the Bloomberg terminal. This is Bloomberg.
engine number one was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in engine number one on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is, is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
Deutsche Bank ready to pay more and pay out more in terms of bonuses for staff to have that strong talent that I'm sure you want?
Well, look, it's a war for talent. It has been, in other cycles before. It is now. We're finding that we're competitive in that war for talent.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
For your first word news, and the UK has rounded up about 20 nations to pledge to stop funding foreign fossil fuel projects. But the deal has a couple of key holdouts, China and Japan. The agreement isn't binding, but it marks a further tightening of the flow of money from public development banks to oil, gas, and coal. The U.S. and Iran will resume talks on November 29th aimed at reviving that nuclear deal. The two sides don't speak face-to-face, instead through European and Russian intermediaries. But there's skepticism the negotiations will be able to resolve deep differences. Coming up, we'll preview the BOE decision with Christian Keller of Barclays. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
Le digital humanities sono un'occasione.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Friday, as the pandemic fades, will job restoration accelerate? Will a tight labor market push wages up?
I don't think we've ever had a hotter jobs market.
Tune in for the October Jobs Report Friday on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons, both in New York. And Matt, I thought banks were doing pretty well today, a little bit weighed down by Credit Suisse, but elsewhere we've had some solid results. But actually energy stocks, the biggest gaining sector, as we look for further guidance from OPEC Plus as to how they'll play this really tense geopolitical situation.
Yeah, and the underlying commodities rising across the board. If you look at GLCO Go, which I do, you're going to see a lot of green in terms of crude, but also in terms of gasoline, gas oil, in terms of jet fuel, natural gas, etc., and so forth. Coal as well. Coal has been doing quite well this year, although not as well. You know, at one point, coal had actually quadrupled in price. It was up 300% at the beginning of October. Now it's up only double, so it's come back a lot. But yeah, energy, underlying commodity only doubled year to date. The underlying commodity's been doing great, and the producers have been doing great. And I don't know if OPEC Plus is going to listen to Joe Biden's, pleading to produce more.
Yeah, indeed. And maybe they're more concerned about the possibility of overproduction into next year, thinking about where the Iranian story goes from here. Kaylee, no doubt energy companies are focused, but also tech stocks. Tech stocks really doing well on the back of the Fed moves yesterday, as if the way had been made clear for another leg up on tech, and NASDAQ futures seen higher again.
Yep, higher once again after record highs for the NASDAQ, for the S&P 500, for the Dow, and the Russell 2000 all reached record highs for a second day yesterday on the back of that Fed decision. And it does look like the gains will continue today. The stock 600 up about 0.5% in Europe, as you said, energy doing quite well. And it's not just NASDAQ futures that are higher, S&P 500 futures are as well, up about 0.1%. Of course, after the Fed decision, we did get another steepening of the yield curve. We are slightly steeper again today, so steepening for a fourth day, sitting at 83 basis points on the spread between 5 and 30-year yields. The real question is going to be, do we get any further pushback on the market pricing of Fed expectations? Lagarde has done it, Powell has done it. What do we get from Andrew Bailey and the ECB later on? Ahead of that, or excuse me, the BOE later on, that's coming up at 8 a.m. Eastern time. And ahead of that, the British pound is weaker against the US dollar by about 0.4%, sitting at 136.31. As for some stocks moving in free market trading here in the U.S., a number related to earnings. Two winners are Fastly and MGM Resorts. Fastly topping revenue expectations, up 9.6%. And MGM Resorts, of course, a casino operator, actually posted a surprise profit. It is up 3.5%. But Skills and SunPower both posting disappointing results, and they're lower by 7.5% and 9%, respectively, Matt.
All right, I'm looking at the yield curve, and yesterday after we got the Fed decision, you saw a little bit of a reverse of the flattening, a little bit of steepening in the yield curve. But we're still, and this is the 530s, you can take a look at a number of different spreads, we're still coming down to levels that we haven't seen since the beginning of the pandemic, basically April of 2020. We have Christian Keller with us right now. He is Barclays head of economics research. And Christian, I wonder what you think of the flattening yield curve over a longer term, of course, in relation to what the Fed had to say yesterday and what you expect from the Fed throughout 2022.
I think the flattening that we had seen in recent weeks was probably exaggerated, and markets already early in the week started to react somewhat, taking out some of the maybe more extreme rate hikes were priced in early on. We saw that also in Europe. And I think what Powell did yesterday very much gave the message that, we're going to taper, and that was, no one was surprised. They did pretty much exactly what was expected. But he also gave markets a clear, I think, indication that the bar for actually raising rates was much higher than for starting to taper. And I think markets reacted to this. And at the same time, as your colleague said earlier, we have seen consistently upside surprises on earnings and equities. Margins have been quite resilient. So markets are taking this as, yes, we're going to see tightening, but central banks, in particular at the core, some other central banks react differently, but at the core, the ECB and the Fed, they will move very cautiously. They will not surprise us with earlier hikes, in particular not earlier hikes in the market is already pricing. And I think curves are adjusting to this right now.
Okay, Christian, good morning to you. So does that chime with hikes in June or July? Is that cautious? Is that being careful?
We believe they will not hike in 22. We think they will start hiking in 23, probably the second quarter or so. And that it goes along with our view that at the markets, at the moment, markets are very excited about the inflation pressures that we're seeing. Matt mentioned earlier, there's a lot in energy. But if you really look forward, do you think energy will continue to go up year on year, even in 22? If you don't think that, if you think that we get some normalization in supply chains, we think the chances are good that in the second half at least, or a bit earlier even next year, we see those year on year disinflation. And then that will then give the Fed, by the time it comes middle of next year, some more leeway. And they say, look, inflation rates are actually coming down. We will hold this off until 23.
We had a conversation in the earlier part of the programme, Christian, with one of our colleagues who said, look, if we don't get a hike from the Bank of England today, and that's next up, isn't it? If we don't get it today, it'll come in December. Is that where we sit on the BOE, Christian? If we don't get it today, it comes in December, so it'll certainly happen at some point this year.
I think that's exactly right. I think the Bank of England has communicated very differently than the ECB or the Fed. They have been quite aggressive, at least a number of people in the MPC, including the governor, have now told the markets that they want to do it. The market is already pricing a move today. We actually think, given that the MPC is split, we think they may wait. They may hold off today. Maybe also after the message from Powell yesterday and the ECB earlier, they will hold off to December. But if they don't start at all now, it would look very awkward given the communication they have done earlier.
Christian, is it a greater risk that the BOE moves too early or that the Fed ultimately moves too late?
I think central banks right now are seen by the markets as all basically being behind the curves. I would think, though, that the situations these central banks are facing are different. Yes, inflation is going up globally, but I think what the Bank of England became concerned about is a deterioration in expectations. That was actually worse than the deterioration expectation that we've seen in the US or in Europe. And therefore, it probably makes sense for the Bank of England to move earlier, show that it's credible, an credible inflation targeter. So therefore, I think it's not so much about how early they move, but also how many hikes they will do. And markets, including us, also are expecting that they do relatively few. Get credibility, but not over tighten to hurt the economy.
So what do you expect to hear in terms of guidance from Andrew Bailey? If indeed we get a hike today or if they guide for December, what do you think they'll say about how aggressive they are going to be going forward in the pace of tightening?
We think they will try to stick to messages, I think, that we have seen from others as well, that, there's large uncertainty around the transitory nature of this inflation. And we think that they will, signal they're willing to hike and do more than just one step, obviously. We think they would end obviously already in May or so, 75 basis points. And, he probably try to stay away from giving too much guidance. I think their message right now is we're doing an initial hike, so you can count on us. We are taking inflation serious. We are looking at the deterioration expectations, and we don't want this to continue. I think this will be the main message, and they will hold back, not telling markets too much of, how much they would go.
Yeah, it seems, Christian, the more you guide the markets, maybe the more the market comes to test you. So thanks very much for joining us. Good to speak to you. Christian Keller, Barclays Head of Economics Research. Thanks for bringing us your perspective on both the Fed and the Bank of England. Coming up next, Jochen Wenning, Munich Re's CEO, the reinsurance industry, right at the heart of the debates around how much the financial community should continue to support and over what time frame the fossil fuel industry. That conversation shortly. This is Bloomberg.
Just finishing what you were saying, Tom.
Thank
November
you.
3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now into weakness. Is this where they play the music in the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Matt Miller and Kaylee Lines, both in New York. Now, the COP26 Climate Summit, still underway in Glasgow, has seen leaders and executives come together on pledges to get to net zero. Bloomberg's Maria Tadeo is there in Glasgow for us and joins us now with the CEO of one of the world's largest reinsurance companies, right at the heart of these conversations. Maria.
That's right, and we're joined by Joachim Wenning, excuse me. My German has not improved, and I was in Germany for 3 months. Who is, of course, CEO of Munich Re. You're here, of course, this is a day where we're going to focus a lot on clean energy and kind of the role that business can play into this. I wonder, do you feel like you're being asked too much by governments?
I don't think so, because I think that the insurance industry has a lot of knowledge. And what the insurance industry has is really the deep expertise in risks. And risks understanding and risk assessment is absolutely needed in the transition from fossil energy production and consumption to renewables.
But the reason why I ask you this question is because when I look at your targets, right, you say we want to get to net zero in the next 20 years. You have very ambitious targets. At times, your targets are actually faster and quicker than government ones.
Right.
So how do you explain that gap? I mean, you're making the effort, but what about the infrastructure of government?
I think that what is needed is that there is sort of a cohesion between the speeds of governments and the private sector. So the private sector can be a front runner, but it can be a front runner that much. And then the real transition and the government work needs to speed up and to catch up. It cannot lag behind that. And that is why I pledge that there is roadmaps by governments. Each country should have a roadmap that clearly specifies in detail how they want to transition. And the transition needs the transformation from fossil energy into renewables, plus it needs carbon removal. That is unanimous understanding by science. So each country needs then to give an answer to what's the speed of bringing new renewables, make them available. Which renewables? Water, wind, solar, and how much, and how speedy? And what about carbon removal? All of that requires technology. And defining, outlining then clearly a roadmap, country per country, is the guidance that the private sector needs to know, oh, I have a clear picture now of what the UK will look like in a year, in 5 years from now, because the country has outlined it, and then the private sector can more easily invest into it, and insurers can take the risk of that transformation.
And I'm happy you mentioned the transition, because in Europe right now, with the energy crisis that we're having this winter, there's a big conversation as to whether perhaps you should also factor nuclear into this. You're German, your country's moving, or has moved already away from nuclear, spending on gas. What's the transition period going to last? Because I guess it's very hard to navigate for a business like you what the next 10 years, 10 to 15 will look like. Renewable energy clearly is not there yet.
I agree. So that transition, I think, from a German perspective, is very challenging, because you go out of coal, and coal was one of the fossil energy sources that was key in Germany, and we phase out of that. Rightly so, because science suggests you have to go out of coal.
So you believe it was the right decision?
It was the right decision.
Okay.
It is the right decision to move out of coal. There is no doubt. Science suggests so. By 2040, at the latest, the world has to exit coal. Otherwise, you don't achieve
even if it
net
makes
zero
you
in
dependent
2050.
on Russian gas, I guess? That's the...
Absolutely. I mean, it's science. I'm not doing a political debate now. If you go out of coal, then you depend more from gas. You will depend from one or the other energy source anyway. So exit coal has to happen worldwide, no doubt, and it's happening in Germany. Germany exited nuclear. That's a German choice. From a pure carbon emissions perspective, that's not pretty favorable, because it's almost carbon neutral, almost. So you would like to have nuclear, but it's too late. And the German tolerance towards nuclear energy is not there. So let's accept it. Coal is out. Nuclear is out. So what is left is gas and oil and renewables. And here we need answers. How we bring renewables then into the German system, and which ones? And are we putting photovoltaic panels on every roof, or are we going to buy it maybe from African countries, because there is way more sunshine, it's way more efficient? And what about wind and water? And what about the grids? And you need storage systems. So that is what I mean needs to be clarified, and that's lacking.
And I'm very glad you mentioned this, because when I was in Germany, a lot of the German industry said we have the Fit for 55 coming in. We have all of the European regulation kicking in a very small amount of time. Do you have the clarity you need from Brussels? The Fit for 55 seems to be a huge challenge for the German
No, we don't have a clarity. At a very generic level.
It's generic.
It's very generic level. You see where it is going. And take the Green Deal, for example. It's a good thing in the sense that it is long-term, but it has mid-term targets, and it demands from every country to sort of specify then, what I mean a roadmap, specify what that concretely means. That is lacking. But that is lacking almost worldwide. Do you know that for the US? Do you know it for India? Do you know it for China? I don't.
And that's a criticism we've heard from a lot of CEOs, that we need global rules, in fact, particularly in the ETS. So that's a very good point. Mr. Venning, thank you so much for your time. As always, pleasure to see you.
It was a pleasure. Thank you.
Anna?
4:30.
Maria, thanks very much. Bloomberg's Maria Tadeo joining us there from COP26 taking place in Glasgow. Coming up on this programme, we'll stick with the finance sector, but head to Swiss banking. Credit Suisse warns of a net loss in the current quarter. We'll hear from the bank's senior leadership. They're exiting prime services in a sharper pivot to wealth management. This is Bloomberg.
past 18 months have reminded us how essential the PC is to work, life, learning, and connecting. And with Windows 11, we have renewed sense of the role Windows plays in the world. It offers personal agency and real choice to users.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards is in London. Now, bank earnings continue today across Europe, with Credit Suisse warning of a net loss in the current quarter. Francine Lacroix spoke exclusively with the bank's senior leadership earlier today.
We had very solid results. So if you look at our reported pre-tax income, it was up 25%, and also adjusted pre-tax income up in a similar amount. The reported pre-tax income, as you said, also had some impairments, but it also had some other areas. Legal provisions were part of those impairments, but also another impairment in asset management. If you look at net new assets, very solid, over 6 billion of net new assets, and very strong capital, 14.4% CET1 ratio. So I think overall very solid results. Investment bank was up 9% in terms of revenues. Switzerland, very strong performance, up 25%. So I think overall, I think it was a very solid result in circumstances which were not easy.
Antonio, when you look at the strategy, of course, it's exiting prime services, it's unifying the wealth unit. What bank are you trying to create?
Well, Credit Suisse has, I would like to start by saying, Credit Suisse has outstanding businesses and outstanding franchises. What I and the boards and Thomas and the executive board together we try to create is what's the optimal combination that actually makes it a bank that delivers for all of its stakeholders. Clients, as the bank has always been doing, for its employees and also for its shareholders. And that bank is a bank that has very significant advantages. The bank has a 165-year history, fantastic brand, with DNA of being an entrepreneurial bank. We absolutely want to keep that. It's a big advantage. That means that the bank is really good at serving clients holistically, either entrepreneurs or families, and with fantastic teams present in great businesses that are growing worldwide and in great geographic areas. So as a combination of all of that, we are going to have a bank as a vision that is going to expand further wealth management and making a significant shift of 3 billion Swiss francs into wealth management, which is a higher return business with much lower risk. We are going to speed up and beef up the areas of the investment bank that also serve clients holistically or have significant competitive advantages. And thirdly, we are going to keep and develop asset management, which also has important synergies and competitive advantages. But really important, all of this, it will be a bank which will have a much lower risk profile. And this is the real important thing. A bank that has risk management at its heart and that will deliver for both clients, employees, and shareholders in a holistic way with a much lower risk profile going forward.
That was our exclusive interview with Credit Suisse CEO Thomas Gottstein and Chairman Antonia Horta Osorio earlier today. Now a look at what else we're watching, and I am watching the OPEC Plus meeting. Yes, OPEC would like to pump 400,000 barrels a day more in December, but President Biden would like to see something more like 600 to 800,000 because he's really worried about the higher prices American consumers are paying at the pump. Gas is like $3.40 a gallon, Matt. I don't know if you've noticed in your short time here in New York, but it's pretty expensive, and President Biden would like to see OPEC Plus do something about it.
Pretty expensive for here. You know, I was paying $7 a gallon in Germany. One of my coworkers earlier was saying, it cost me $60 to fill up my tank. And I was thinking, it cost me about $200 to fill up my tank on a regular basis in Berlin. So I don't know. In any case, I'm watching the SALT deduction. That's expensive. I'm looking around for houses in the tri-state area, and taxes are like $20,000, $30,000, $40,000, $50,000 a year. And I know that some of the progressives are against it. Bernie Sanders was saying he doesn't want to give billionaires any more tax deductions. I'm not a billionaire. Now it's come out that he doesn't want to give anybody who makes more than $400,000 any deductions. All right, I can see that's a lot of money as well. But it's a big jump from $400,000 to $1 billion, isn't it? I wonder if he's clear on that. $1 billion is $1,000 million. In any case, right now there's a bill floating around the House that says they could raise the cap to $72,000. That sounds right to me.
Like so many of the debates these days, Matt, so much middle ground is available and yet so often not used. Let me just mention what I'm watching. I am watching the Bank of England rate decision, of course, as you'd expect me to do, being here in the City of London. There have been plenty of hawkish signals from the bank. Inflation is higher than they want. They may have to defend that credibility given all those hawkish signals. But the furlough scheme only ended at the end of September. If you're looking for a reason not to do it now, you wait another month, get the data and do it in December instead. And there are limits to monetary policy and how much it can affect whether shipping containers are in the right place or the chips are in the right place to go into the electrical devices. So there's plenty to learn from the Bank of England later. More Bloomberg surveillance is ahead. We'll hear from Adam Poston, former Bank of England Monetary Policy Committee member, of course, and Ed Yardeni will be amongst those voices as well. So lots of great voices to speak to when it comes to global central banking and beyond. This is Bloomberg.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely, but I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, You can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The Federal Reserve has done an outstanding job here in pre-signaling.
The Fed is not trying to kill the expansion, they're trying to extend it.
The Fed has made sure to communicate their stance because they know the impact on the equity market.
The market doesn't own the definition of transitory. The Fed owns the definition of transitory.
Transitory is a funny thing. It can mean different things at different times.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Can we just lose the T word from New York City for our audience worldwide? Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your equity market up 4, on the S&P up 0.1%. Tom, on the NASDAQ, an 8-day winning streak into Thursday.
You go right there on NASDAQ, and John, I'm going to go to small cap. I think the unspoken yesterday was the explosion in small cap. Ben Laidler nails it this morning. He says small is beautiful. And John, this is about economic growth, the bet that off of a measured, in-control Fed, you're going to see continued economic growth in America.
Record highs across the board, Tom, on a Russell, on the NASDAQ, on the S&P 500, and a patient chairman underpinning some of that, Tom, after yesterday. What did you make of yesterday coming into this morning?
I made it yesterday. Michael McKee is the toughest interview in economics. Once again, McKee brought him to a stammering silence, but he got his message out. You wonder, John, this morning, can the Bank of England do the same?
Maybe. The Bank of England coming up. Did you like that? Did you like that? Okay, we can play it again a little bit later if you missed it yesterday. The Bank of England coming up a little bit later, Lisa. A live meeting, according to the chief economist.
And frankly, according to markets that are pricing in a full rate hike. I have a question, though, about their bond purchases. They're still purchasing bonds. Do they continue that and hike rates at the same time? I mean, it sort of is this conundrum. Well, do you ease and tighten with different hands? And then what does that do?
To be fair, there's only a month left of QE.
I know, but still, I mean, it's still, are they going to expedite that? I mean, it's a real question at a time with signaling that is so muddy, and frankly, a market that's calling the Fed and the Bank of England's hands.
John, a calculus major from the University of Chicago, constitutional law, nails it. It's all about the margin, the marginal changes in taper and rate rise and all that.
Yeah.
And the chairman yesterday, in his own way, gave a confidence that they can marginally change over time.
And my take, Tom, after yesterday is whatever you want it to be.
Yes.
Here's the reaction function. Plug your own forecast and off you go. Rate pricing didn't move off the back of it, TK. That's really it, isn't it? We didn't see a big change after yesterday.
Why don't you do a bond check and tell us about it? But look at the 2-year yield. There it is.
Just below 50 basis points. Here's the price action for you on the equity market. Equity futures are up about 3 points. We advance about 0.1%. I'm laughing because I can tell that Tom's tired after yesterday, deep into the evening. I'll tell you more about that later. Yields in 3 basis points on 10s, 157 in the FX market. Euro dollar negative about 0.5%. Lisa, some dollar strength out there this morning. Euro dollar 115.50.
It seems to be a reassessment as people basically choose their own adventure with the Fed's message and decide whether or not the Fed could potentially hike as soon as the market is currently pricing. That is the question at 8 a.m. We get the Bank of England rate decision as well as their bond purchasing plan going forward. I know they only have a month left, but still, the messaging of both tightening and loosening at the same time is a bit confusing. Right now, we are seeing one full 15 basis point hike priced in for the Bank of England. 8:30 a.m., this will be a fascinating data dump in the United States. Initial jobless claims, non-farm third quarter productivity, and September's trade balance. The mixture of potentially the lowest read of initial jobless claims post-pandemic, plus non-farm productivity that's expected to fall with the increase in wages really raises a question for Fed Chair Jay Powell. How sticky is wage inflation? How tight is a labor market that he is convinced is actually has a lot more slack than a lot of people are giving credit? And then today also, OPEC Plus is meeting to discuss output targets. This comes, of course, as President Biden and others around the world say, please pump more oil. Please pump more than 400 barrels of oil in addition that they are trying to bring back online. And OPEC Plus is saying, nope, not going to do it. And then there's a question of strategic reserves. Would the U.S. go that far to lower the price at the pump, John?
Fuel costs are high, according to the president, because of the refusal of Russia or the OPEC nations to pump more crude. Senator Manchin, Tom, was on with Brett Baer over at Fox yesterday evening, and he said we could maybe do more at home on the oil front. Maybe there's something in that.
A little bit of West Virginia there as well, almost heaven. And, you know, John, I got to say this, and I mentioned this in a meeting earlier this morning. Let's not forget a gallon of gas in his political heritage, particularly after what we observed the first Tuesday of November.
Did you almost break into song just then, Tom?
I did, almost. But it got it reversed as well. Brad, do we have that chart ready? Let's bring this up. John, this is what the chairman got wrong yesterday. Alec Tanzi of Bloomberg is phenomenal at statistics. Oh, we're tight. There it is, right there. That looks perfect. John, the chairman said inflation-adjusted wage growth was pretty much level. Alec Tanzi says, maybe not. And the fact is, with the data we've got now, we're running at a negative 1.6% on real ECI. That's inside baseball. But all you got to know, John, is a lot of Americans, including in West Virginia, have negative wage growth.
Your labour market data coming up a little bit later this morning, as Lisa pointed out. Dara Mayer joining us now, Head of Research at FX Strategy at HSBC. Dara, let's just start here. What did you learn in the last 24 hours?
Well, I think what we've learned is the market, while the Fed's happening, only thinks about it and the dollar in the context of the US. And then when they all go to bed and they wake up the next day and they think about the dollar relative to everyone else. And that's why we've had that, in a way, slightly peculiar price action with the dollar weaker while Powell was speaking. And now the dollar stronger this morning because, of course, everyone's reminded, well, hold on, whatever the Fed's doing or not doing, they're going to be doing more than the ECB. So I think that's been kind of the main change over the last 24 hours. It's just that recognition, the reality that currencies are the relative asset class. And that was missed, I think, yesterday.
Dara, what's so important here is everybody on Global Wall Street understands the heritage of HSBC, the idea of how Steve Major has been so right about a low-rate regime. What is your dollar call after you've nailed resilient dollar over the last 2 years? What's a dollar call 12 months forward?
I think it's a grinding, gradual dollar strengthening story. I mean, we've had that view for a while now, and look, it doesn't sound very exciting, and I think a lot of the street has moved this way as well, so it's feeling a bit more consensual, which of course always makes us a little bit twitchy. But on the basis that the Fed is exiting, it took a step yesterday, there's more steps to come, and you've got ECB's President Lagarde saying the very opposite. If you like, if that's the key crunch point in G10 FX, it's really when people care about currencies, it's really euro, dollar, cable, and yen. I think that dichotomy persists. So you've got, and you're paid for holding the dollar relative to euro. You've got the carry. So who doesn't like get paid for doing nothing? John Farrow does. So, why not the rest of us? And so I think that's where we're at. You're going to buy the dollar.
What did I do to deserve that this morning, Darren?
The show.
Hey, Lisa, carry on.
All right.
Darren and I have done this morning.
He's on once a week forever.
Yeah, exactly. He basically just phones it in. Not at all. Honestly, Darren, going forward, there is this key question of whether to trust the collective wisdom of markets or whether to trust the patience of central banks that seem to be looking at a very different picture. And we say that with the Fed, not so much the Bank of England. So which is it? Who do you think has it right now if the Bank of England follows through with a rate hike today as the market is pricing in?
I've got to admit, I just expressed bullishness on the dollar. I'm pretty cautious on sterling. As a house, we're calling today a pretty finely balanced outcome, whereas the market is telling you it's nailed on. And so that creates an asymmetry to this downside for sterling just around this event. But more broadly, the UK economy, we're going to see a normalization of the current account, so, a deteriorating deficit. There's a lot of talk about the extra government spending in the budget, but the reality is UK fiscal policy is contracting, and it will be a headwind to growth. And of course, you've got Brexit and all these bits and pieces. So I do get the sense that in the UK, kind of the tail's wagging the dog here, and perhaps that explains, the market's looking for a sequence of rate hikes from the BOE over the next 12 months, but really nothing thereafter, which, to my mind suggests, is the market kind of contemplating they will hike and then have to reassess, which of course would be quite a mess.
Got any more questions for Dara, Tom, or are we done?
No, I think
done.
We're fine.
Are you done?
We're done.
Done. Dara,
Sarah
thank
was so
you.
done. Dara, anytime,
Dara,
please.
thank you very. I thought we were friends. From HSBC. Dara, thank you, sir. Thank you very much.
Take care.
Remember the difference between the Federal Reserve and the ECB yesterday? I think it was pretty stark. President Lagarde came out and just said, 22, forget about it. Really cleaning up some of the mess maybe from last week, really cleaning up and just saying, 2022, forget about it. The chairman didn't do that. In fact, there was some real humility from the Federal Reserve chair just to say, next year, who knows?
Right.
These are the sets of circumstances that remain our base case. This is how we'll respond to things if they change. That was not what we heard from the ECB.
John, I'm going to go to Michael Darda, absolutely on fire, like I haven't seen him in 10 years the other day, the gentleman from Wisconsin Economics. And Darda just said, look, this is proto-Keynesian rubbish. That's what he called it. He's not kidding, and he's using it very academically. This is a chairman straddling the, not hysteria, but the true angst over rising inflation, stagflation. You guys know the drill. And also a rational thought about where we go on nominal GDP, where do we go on the inflation trend, and where do we go on job formation?
I hate to say it because it sounds a little bit cliche, but data dependent, Lisa, seems to be the takeaway here for this Federal Reserve. Without really understanding what next year looks like. They'll always have a base case, but there's a huge balance of risk around that, and it's tilted to the upside for inflation, a whole lot higher for a whole lot longer.
It's one thing to be data dependent in an environment that is moving at a normal pace. It is another thing to be data dependent at an economy that is changing at a breakneck pace, both turned off at the drop of a hat for the pandemic and then brought back online slowly, to then understand the dynamics here. The question that I have is, will the Fed have enough time to adjust their bond purchases and then rate hikes should the data start to change dramatically? And that, I think, is one of the key issues.
Lisa, can you imagine if they started this year, the year 2021, and said transitory, second quarter, third quarter of next year, we expect to see some of those temporary factors fade? They have really moved the goalpost as this year has progressed.
They have, and the market's giving them a pass because you're not seeing a tightening in financial conditions
That's great.
yet.
Go on, Tom.
Should they move the goalposts in English football or American football?
They're moving the goalposts at the Federal Reserve, Tom. We'll see if they do the same on Threadneedle Street a little bit later.
You say goalpost?
The Tots have moved the goalpost. Do they have a new coach this weekend?
They need bigger goals, Tom.
Yeah, they do.
Harry Kane needs a bigger goal anyway. Equity futures up a 10th on the S&P 500. Even Lisa got that.
You sounded like Trent at the
points to 157. What was his second name, Tom? What was Trent's second name?
Kyrie, I love his car.
Come on.
He has that cool Mercedes. You do. You
From New
look
York
like
City.
Trent. Wait,
Yeah,
you look
right.
like Bond.
I wish I had that hair.
You
of
look
Trent.
like Bond.
Trent from the Independent's got great
Bond.
hair. Get to the break. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Federal Reserve Chair Jerome Powell is doubling down on the central bank's new policy framework. He says he won't consider interest rate increases until the labor market gets stronger, even though inflation could run hot for months. Fed policymakers announced they will start slowing their $120 billion monthly asset purchases. President Biden says his party's election defeat in Virginia shows the urgency for congressional Democrats to pass his economic agenda. He told reporters that maybe the results would have been different if had already signed the legislation. The president said, quote, "We should produce for the American people." House Speaker Nancy Pelosi is pushing lawmakers to take a vote on the Biden plan. The U.S. and Iran will resume talks November 29th, aimed at reviving the deal that imposed limits on Tehran's nuclear program. The two sides don't speak face-to-face, though they go through European and Russian intermediaries. There's skepticism that negotiations will be able to resolve differences over sanctions and the permanence of the deal. The price of oil continues to slip. Investors have turned their focus to an OPEC Plus meeting on production policy today. The cartel and its allies are expected to stick to their planned gradual output hike for December. That's despite calls from consumers to pump more oil. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This week on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. This week on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Senator Manchin, Senator Sinema, the moderates in the House are going to have a bone to pick with progressives. Manchin is looking at a position where I think he's going to feel really comfortable saying, put the bill in my chamber. It's my turn to write it the way that we can keep independents on board for, and you'll be lucky if we pass it.
And yet that's not exactly how yesterday played out down in Washington. Henrietta Trace there of Vader Partners, the Economic Policy Research Director from New York City this morning. Good morning. Tom Keene, Lisa Bramis and Jonathan Ferro. Your equity market, all-time highs into Thursday, up 4 on the S&P, advancing 0.1%. 5-day winning streak on the S&P, 8 on the NASDAQ. The NASDAQ up 0.4%. Yields in by 3 basis points on 10s to 157.18. Commodities bouncing back. OPEC plus in focus, 81.81 on WTI, up a little more than 1 full percentage point. And TK, it was Trent Krim. Trent Krim,
yes, thank you. Thank you very much.
I mean, I had to Google that one, of course.
Well,
yes, Trent Krim.
You know, I talked to him about the tots the other day.
What did Trent have to say?
It was off the record. You know, I didn't want to say it. But
was it really? Also, Darren Mayer wrote in. He apologized. He said, I guess I owe you a beer. Just to clean that up, you know.
A beer.
Just wanted to sound hard on TV, Tom, and then 20 minutes later.
Well, it's the bright lights. And,
I know.
You know,
I know.
We all,
it gets to people.
We all fall apart.
It gets to people.
Yeah.
Do you want to talk about it?
Yeah, I do.
We can have a conversation about it now. You want to do therapy live?
You know what bothered me yesterday was a countdown clock. I mean, it's very unnerving to be on air with a Fed countdown.
Does that make you nervous, Tom?
Made me nervous. I got very upset. Let's move on right now. Jeff Fitzpatrick with us here on A Change Washington. Greg Valliere has a note this morning where he says Fitzpatrick's Washington is stunned, which is an interesting outcome of this election. Maybe a no surprise. Jack, I want to use the word negotiating. Is there negotiating between the left, and particularly the Sanders left, in the center, or is there posturing after this election?
There seems to be negotiating that involves some posturing. Right now, the back and forth, I would say, probably is actually more between House Democrats, who have been very responsive to progressives, and Joe Manchin. That's where you see the divide on the paid family leave part of this reconciliation bill, with Democrats adding a measure that Manchin doesn't appear to support, and kind of seeing if maybe one side will change their mind. So there's a back and forth, and sometimes it's a game of chicken.
Yeah,
But there is negotiating as well.
I take great issue with the idea that it's Joe Manchin against the world. How large is his side after the results that we saw Tuesday?
In Congress, he and Kyrsten Sinema in the Senate do stand out. They may at times be speaking for more moderate members. Someone like Maggie Hassan in New Hampshire has a tough reelection, and she may not want the spotlight like them, but it's not really just them. And there are House members. No surprise that Josh Gottheimer is one of the more vocal moderates from New Jersey, seeing what happened with the very close New Jersey governor's race. So it's not just Manchin and Sinema, but that's more of a factor that they seem to be, particularly Senator Manchin, seems to be comfortable with the spotlight and kind of being the center of that moderate push.
Jack, let's go to a House Democrat, a Virginia Democrat, Abigail Spanberger, who said the following in the New York Times: "Nobody elected him to be FDR. They elected him to be normal and stop the chaos." Is that widely shared down in Washington? Because there is a view outside of Washington, and what we've witnessed over the last year has been massive overreach. Massive overreach. Does that resonate?
That does resonate with moderate Democrats. The issue for Democrats is they have to please both sides. And so you have moderates saying this needs to be not excessively ambitious. This needs to be paid for. We need to address concerns about inflation. But they need significant wins as well. And they need Abigail Spanberger and Manchin to agree with Bernie Sanders and Pramila Jayapal. And the moderates don't want to see the bill fail or shrink into oblivion. They want to campaign on significant achievements, but particularly the inflation concerns, paying for it, and the talk of a $6 trillion measure earlier this year was a bit out there.
Lisa, the knee-jerk reaction yesterday is that the likes of Senator Manchin would have a little bit more leverage after the events of the weekend into Monday into Tuesday. That's not what happened. In fact, many of them were tumbling down on what they needed to do.
And it really shows the sort of bifurcated nature of the Democratic Party, because the progressives need to speak to the progressives who elected them, and those progressives are not going to be happy to them caving just to get something done. You do wonder at what point the shift goes toward something getting done, or if they don't, what's the ramification in markets, John?
Jack, is this a big week or not? Do we actually get a vote this week or not?
Well, the members themselves don't seem to know at all. The official vote schedule is vote time, question mark, question mark, question mark. The budget chairman, John Yarmuth, said he's skeptical this happens this week, but it potentially could happen as soon as today. They've had manufactured deadlines to try to push people to move this along, but really we can't point to a specific legislative deadline where it's do or die. So maybe it's this week, but they may have to keep working on it because there's no real deadline other than the ones they make up for themselves.
Jack, thank you, sir. As always, Jack Fitzpatrick there down in D.C. Lisa, as divided as ever down in Washington.
I do wonder how much President Biden's hand is being called by inflation. And, we were just hearing about that from Jack, but I wonder how desperate President Biden is, given some of the rhetoric that he's had around oil. I mean, the fact that he's pushing OPEC Plus to pump more and talking about releasing some reserves from the strategic holdings, what does that tell you about the level of desperation to bring down the price of oil ahead of the 2022 midterms?
I have to say, I didn't get a sense of desperation in the last 24 hours.
Exactly.
Even after, Tom, that very tight result in New Jersey, even after Glenn Youngkin's win in Virginia, I didn't get that sense at all.
I 100% agree, and Vallier highlights that this morning, that they're adding goodies, as he puts it, to the social part of the bill. And no, I don't see the desperation there, John. Maybe it'll be there in polling as well, particularly if the president's polls descend from, I believe it's 40% down to a Trumpian 37%.
But John, what does it tell you? It is an extremely extreme action to release some of the holdings from the strategic reserves.
Sure.
To do that at a time when the price of oil isn't back to its all-time highs that it's experienced over the past few decades, at a time when that's just one input to the inflationary pressure, highlights something else that perhaps you're not seeing in these other negotiations.
Oh, I totally agree with you that they're very concerned about it. They're incredibly concerned about it. And the fact they have to defend what is happening in the economy, Tom, that in and of itself suggests they're on the back foot here. They're in defensive mode, even though this economy is generating decent growth.
Henrietta Trace was on fire yesterday, and her defensive mode is they're going to lose, I believe she said 35 or 40 seats in Congress. I don't know if that's true or not, but, you know, she's a grizzled white marble veteran of Capitol Hill. John, can we pre-sell this next guest? This is really important, this conversation with Dr. Posen, I should say, on inflation. This is wicked, wicked important.
Adam Posen does not think the Federal Reserve should be defending where inflation is. In fact, he thinks they should be embracing it. That's an original point of view at the moment, at least compared to the economists on Wall Street. Adam Posen's coming up shortly, the president of the Peterson Institute. Looking forward to that. From New York City with Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your equity market is up about 0.1%. You've got a Bank of England decision just around the corner. And we've got a former Bank of England policymaker just around the corner too. From New York, this is Bloomberg.
Is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's as simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked about other things. Now that's moving to become mandatory.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Coming
enter Thursday at all-time highs on the equity market, on the S&P, on the Nasdaq, on a Russell, record high after record high after record high. From New York City this morning, good morning. A 5-day winning streak on the S&P 500. We have a lift this Thursday morning, up 0.1%. An 8-day winning streak on the Nasdaq into Thursday. We have a lift this morning, up 0.4%, advancing 64 points. Futures just keep pushing higher, TK. We add some more weight to that story. It's the longest winning streak on the Nasdaq of the year so far.
And again, I watch small caps.
Thank you, Tom. The Russell up 3, advancing 0.1%. I don't know what that was. Switch on the board and get to the bond market. 2s, 10s, and 30s shape up as follows. Still don't get what that was. 46 basis points on 2s, up down about 3 basis points on 10s to 157.
Yeah.
On 30s to about 199, down 3 basis points. Tom, it's interesting yesterday. A lot of people define the success of the chairman based on what happened in the market. Not much happened, but the fact of the matter is, not much happened, and there's still some rate hikes priced for next year. I said earlier this morning that yesterday was whatever you want yesterday to be. Here's our reaction function. You come up with your own forecasts, plug them in, and you decide when we're going to make a move. That is a data-dependent Federal Reserve, Tom.
John, and this folds into our next guess. What we're seeing in small caps is wicked important because, as Ben Laidler at eToro points out, it's a signal of growth confidence. And that folds into this inflation target debate.
And if we hike, and we have to hike for the right reasons because we get back to maximum full employment quicker than expected, fantastic news. If we hike because this Federal Reserve starts to get concerned about price pressure before they achieve their objectives in the labor market, not so good. At the moment, the chairman's got a base case. Things are going to be okay. He wants to remain patient. He wants this labor market to heal. We'll talk more about that in just a moment. Let's talk a little bit about this. Switch up the board and get to the commodity market. OPEC Plus. Is that meeting today, Lisa?
Yeah.
It's today. Okay. The pressure's on them to pile on more supply into this market. The president says the reason we're at 82 on WTI is because they're not pumping enough. Now, Lisa, that is true. If they pumped more, we wouldn't be at 82. We'd be lower. But there are other things going on here as well, Lisa, and it's not just OPEC Plus.
Part of it is also the fact that he is trying to reduce carbon emissions and output at the same time that he's saying we want more of them. How does he necessarily dovetail these two ideas at a really polarized time in Washington?
We don't want to invest at home. We want you to pump more abroad. I thought it was a collective global story. Some work to do on that front, Tom. 81.99 on WTI. WTI this morning, just a little bit positive after yesterday's move lower. Tom at 1.4%.
Very good. Let's cut to the chase, folks. This is about inflation, your fears, your confidence in the American economy. We began this discussion as the singular high point of our trip to Washington for the World Bank and IMF meetings, and that was a conversation heated with Adam Posen of the Peterson Institute. We continue today the discussion Chairman Powell is looking at on inflation targeting. Adam, re-justify why we need to move from a 2% acceptable inflation level to something that so many are scared of, a 3% level.
Thanks, Tom, and thanks for having me back on surveillance. I think we've got to get to a 3% target level rather than a 2% target level for two big reasons. First is, as we've seen repeatedly for the last 12 years, when you're this close, your target is too low. That means your interest rates are too low. That means the Fed doesn't have that much flexibility. And so it's less effective in countering recessions, and it's more intrusive into markets to get its work done. The second reason you want to see an inflation target that's a little higher, not permanently hugely higher, but a little higher, is because it helps restructure the economy. We're seeing this right now, that labor markets are undergoing massive change in the US, and you need space for people to get adjustments and to make changes both to wages and to where they work. And that's easier when they're not as close to the lower bound because people don't get wage cuts. They only get wage zeros or wage up.
What is the linkage here of a reflation of an economy over to nominal GDP to the great fear of the conservatives of an overheating of the economy and those ill effects? Explain the sequence of 3% persistent inflation over to a whopping large nominal GDP.
Well, the two are separate, right? Overheating in some ways is driven by real factors. It's when you have more demand than you have supply. Whereas the 3% is basically a nominal factor. It's about what price level you're expecting and taking into account. And so the talk about overheating, whether it's a supply constraint bottleneck or excessive fiscal policy, is something that is, to use the dreaded word, transitory. Doesn't mean short-term over in 5 minutes. Powell finally picked up in the press conference what you and I have been talking about for months. The transitory for economic policy purposes means it doesn't affect the underlying trend. It doesn't mean it's over like that.
Adam, how does the Fed keeping rates where they are, continuing to buy bonds, help the job creation that you're talking about, help people refine a position at a time when prices are going up of things like rent, which is directly affected by the Fed's policies?
No, Lisa, you're right that there is a trade-off here. Now, as always in economics, nothing is costless. So the point of going from 2% to 3% as your target isn't because it's costless, it's because the downside risks are worse. In terms of what you're focusing on rightly, which is the finding of jobs, what we're seeing, for example, with the massive move of workers out of small and medium enterprises to employers like Amazon, Walmart, McDonald's, Bank of America, is we've got a de facto rise in the minimum wage in a lot of the big employers. And this is really important to get people to make adjustments and to resort workers into the places that are more productive. Because if you're a low-income worker, it's really risky and tough to look around and move for a new job. But if the wages go up, then there's an incentive to get past those fixed costs. So there was a great paper at Jackson Hole this summer talking about how a slightly looser monetary policy environment, slightly higher inflation environment helps you make adjustments in the labor market. This was a point I wrote about 25 years ago with reference to Japan, and we saw it bear fruit under Abe, that you keep monetary policy looser if you want to have real structural adjustment in the labor market.
So in other words, you think that the U.S. Can draw a direct analogy from Japan at this point?
From Japan or from Germany after the Hartz IV reforms in the early 2000s. What I think is going on in the labor market right now, at least in the U.S., is there's a structural change as though we had a labor market reform. We haven't had some big legislative package. It's not government driven, but it's people, as you've been talking about on surveillance for a while now, it's people making up their minds that they need a different form of work, and it's employers making up their minds that, yeah, I can afford to pay a bit more to get the right workers and the right relationships. So that's a structural change for about 20-25% of our workforce who are in the low-income service workers. And so we want to facilitate that change.
Adam, you've been at a central bank at these inflection points. You were at the Bank of England coming out of the 2008-2009 debacle. I just wonder, as you look to the Bank of England, you look to Threadneedle Street, where you used to be, and they start talking about a live meeting at the Bank of England this early on Threadneedle Street. Adam, what are you learning from the moment we're in? And what would you recommend to those at the Bank of England thinking about making a move at this point?
Jonathan, I think we're now not just moving countries, but we're moving themes, because the UK is not like the US or like Europe or Japan right now because of Brexit. People have underplayed, I think, despite all the Sturm und Drang, they've underplayed the real economic effects of Brexit. And so I've been saying for a few years, including on this program, that Brexit takes the Bank of England partway back to the 1970s. And what that means is they can't just focus on domestic inflation target the way they had when I was there and the way they have since 1992. They have to keep one eye on the markets. And that's why they're moving forward, in my view, rightly though sadly, to a much sooner liftoff than other central banks. The other thing about Brexit is that it exacerbates shocks that require flexibility and supply. And we're seeing this, that they're having the same reopening shock, the same commodity shock as the Euro area or the US. But because they've cut themselves off from workers in Europe, which were their labor supply, because they've cut themselves off from easy imports and exports to some degree, the shock is that much worse for Brexit, post-Brexit UK. So for these two reasons, the Bank of England is facing a much less salutary set of outcomes than the other central banks, and that's why it has to move sooner, in my view, even though, again, to go back to Lisa, there's a cost to it.
You're more polite than I am. The rude way of saying everything you just said would be that the Bank of England now has an emerging market flavour to the policy dilemma. Would you agree with that, Adam?
Yeah, I mean, I choose to say partway back to the 70s, emerging market is waving a red flag, but I agree. What you have is for no fault of the Bank of England's, the credibility of their anchor, the stabilization of their economy is less post-Brexit and therefore less like the other high-income economies than it was previously.
So John, do we need a banner on television and for radio that says Posen says UK is Banana Republic? Does that work?
That the governor of the Bank of England is the governor of a emerging market central bank. He didn't quite get
I'd rather go with the running around child in the background meme.
That would work better. Governor Bailey with the child in the background, Adam. You want to do that?
Yeah.
Adam Posen, thank you, sir. It's fantastic to catch up with you, as always, of the Peterson Institute. Just a range of opinions, Tom, on what's happening, not just in the US, but a situation in the UK. The Fed behind us, the Bank of England still to come a little bit later this morning.
The history of 15 years ago, and this is Olivier Blanchard in the heart of the crisis, John, saying we need to impute 4% inflation into the system. He did not say that with a permanence, but that was a one-off. And now we've got a group led by Posen, the great Olivier Blanchard and others, versus Summers is in there, versus John Taylor of Stanford, Ben Bernanke and others who are saying, wait a minute, 2% is important and fix it.
Some people will take the other side of this debate, as you point out.
Yeah.
Tom, Lisa, the question we're asking, if you have to make a move now, are you hiking into weakness? That's the question.
And that's the reason why you bring up the emerging markets points, because we've seen that from a number of developing markets, and that might be what the Bank of England will do today.
Tom Keane, Lisa Bramett and Jonathan Ferro, your equity market futures up 5 on the S&P up 0.1%. What do you want to look for, Tom? Small caps.
I'm sorry. It's a signal of growth confidence.
I'm with you, Tom.
Growth confidence.
Market looks good. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Speaker Nancy Pelosi is pushing the House towards a vote on President Biden's economic agenda, but a few key issues are still unresolved, such as family leave, immigration, and rolling back limits for state and local tax deductions. And the measure still doesn't have the full support of Senate Democrats. The UK has rounded up about 20 nations to pledge to stop funding foreign fossil fuel projects, but the deal has a couple of key holdouts, China and Japan. A statement will be unveiled today at the UN climate talks in Glasgow. The agreement isn't binding, but it marks a further tightening of the flow of money from public development banks to oil, gas and coal. Credit Suisse posted lower profit in the third quarter and signaled it expects a net loss in the last 3 months of the year. The Swiss lender also recognized the wealth unit and dialed back risk in the investment bank, discontinuing most prime brokerage.
We have made some tough choices, like exiting Prime, but at the same time, we have strong businesses like in M&A capital markets, in credit, and in other areas.
Prime brokerage was at the heart of the Archegos capital scandal that wiped out billions in profit. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
was just finishing what you were saying, Tom.
Thank
November
you.
3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now.
Wrap it
into
up.
weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. That does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. Do
you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Areas of vaccines haven't happened, and vaccines don't stop transmission of the virus, we think. And so it is unclear when we're going to be in the all clear. Maybe this is our new normal, but it'll be a manageable new normal as we move forward.
I hope we get back to normal. I don't think anyone wants to call this normal yet. Dr. Bhakti Hansati there, Johns Hopkins Associate Professor of Emergency Medicine from New York City this morning. Good morning. Tom Keene, Lisa Bramberts and Jonathan Ferro, your equity market all-time highs, up 5 points on the S&P, advancing about 1/10%. Into the bond market, yields lower 3 basis points to 157.18. We come into Thursday with a record high on the S&P, Tom, a record high on the NASDAQ, and an all-time high on the Russell.
And to be clear, a lift this morning, the VIX of 14 level back to 15.02, but I would call it, John, a constructive tape.
A constructive tape with a patient Chairman Powell underpinning it all at the moment, Tom. In fact, that's not fair, is it? Because the earnings have been pretty tidy too. My question, Tom, going into next year, we'll have the same conversation we've had about this earnings season going into 4Q, whether margins can hold up, and we'll be doing that as growth is decelerating through next year. I just wonder, Tom.
Okay, you sound like Lisa.
4%, does it get it done? If we have a significant move down towards 3, if we get the Goldman Sachs view of the world, 1.5 to 2% GDP growth at the back end of next year, back end of next year, that's a big slowdown.
That's a big slowdown, and that is, they're not alone on that. They've got some company on that as well. But I think the calculation of nominal GDP forward really folds into this equity enthusiasm, and we gained comfort yesterday from the chairman. We have been enthused by the young Turks of Johns Hopkins University, Dr. Adalja, Bhakti Hansati, and all. There is some of an extinguished vintage at Johns Hopkins, and one of them is Christopher Byrer. He is the Desmond Tutu Professor of Public Health at the Bloomberg School. He is truly one of the world's experts in go out there and make them better truly definitive with a focus on Southeast Asia and Thailand. Dr. Byrer, we're honored that you could attend today. Thailand, a few days ago, began to open its borders. They seem to be pushing against the zero tolerance culture of Asia. Can they be successful at that?
Well, they had they were spared early on. It was kind of striking, but they've had a serious wave with Delta. They do seem to be coming out the other side of that. They are a very tourism-dependent economy, as you know. So they're trying, I think, to balance the public health imperatives, control immunization, and also mitigating the economic impacts of COVID. We'll see how they do. They had been very strict for a while.
We talked to Dr. Adalja about one person being sick at the Shanghai Disneyland and tying down 30,000 people for testing. We went through the math for, I think it was 3 to the 10 to the minus 5 or something like that, really ugly math. Explain the futility of that approach across the Pacific Rim.
Well, I think what you're seeing is a tension between the idea that you want zero transmission and no cases, and the idea that if you have high immunization rates with the efficacious vaccines, that you can live with some degree of COVID cases, at least test positivity with COVID cases. The idea that you could really get down to zero and see no transmission at all was, of course, pioneered by New Zealand and Australia trying to do this. And they, too, have moved away from it because, as it turns out, with Delta being so much more infectious, it's probably an unrealistic goal. And the populations just can't tolerate this level of social restriction. So our way out of this is going to be, of course, higher immunization rates. We still need to get there. Now we have approval, at least emergency use authorization in this country in kids. You're going to see that happening globally. That's the way forward, not the idea that there will be absolutely no cases, because it's unrealistic.
Dr. Byrer, on this show, we talk about football. Let's talk about American football. The quarterback of the Green Bay Packers, Aaron Rodgers, tested positive for COVID. He had previously said he was immunized. That was largely thought to mean vaccinated. It did not. There is a question of how to double check what people say when they say they have gotten vaccinated, what the standards should be. Do you think there should be some sort of public tracking system, or do you think that the trust method actually is the best way to go?
Well, what we're seeing, of course, is there's a lot of diversity across the states, and there's a lot of diversity across industries. There are 5 states that have, and New York State is one of them, that have a statewide system for tracking immunization. Mostly, we have been using kind of an honor system, but people are checking in a number of states immunization cards, immunization records against, for example, a photo ID to confirm that, first of all, you are who you say you are, and secondly, you are indeed immunized. And that's required, for eating in a restaurant in a number of places. But we have 20 states where governors have absolutely passed laws, signed laws against mandates and against the ability to confirm immunization status.
Well, no, Dr. Byrer, I was going to just dovetail this into the children debate. The idea here of that kids can now get vaccinated. And there's a question of how schools deal with that, right? Do you end up having to put a form into the school, submit it, saying that they've been vaccinated for COVID along with all of the other shots? Or is it treated as something more akin to the flu?
I think what you're going to see is we're not going to have many states moving toward mandates for immunization in children yet. We've only had this one relatively small trial. We need to see many more immunizations. It's different with adults. We're at almost 200 million people fully immunized in the adult category. So we know that these vaccines are really very safe in adults. So I think the mandates there make sense. For schools, probably not yet, not until we've had many more kids immunized and we really understand fully the safety picture in the 5 to 11-year-olds.
Doctor, thank you for your input, as always. Dr. Chris Byrer there of Johns Hopkins. Lisa, you touched on the messaging around a social issue that I find particularly interesting. Why this particular vaccine has been treated the way it's been treated. If you go into the military, you have to get a range of shots. These are the shots you get. Welcome to the military. For some reason, this one has been treated as it's a special case, away from the other ones, and we've got to have a mandate, and you've got to do this, and then all of a sudden there's been pushback. It's really, really strange, isn't it?
The degree of politicization of a vaccine that is effective according to the trials and that people are taking, I do wonder how much this is actually going to be an election issue, because we saw that, frankly, down in Virginia. That was one of the issues, not believing in vaccine mandates. And I wonder why this is such a political hot-button issue when, as you've said so many times before, John, it's science.
John, the solution is deaths, and we've gone from 1,500 in the last 10 days down to 1,200. What are we going to do, John, at 900 deaths? Does the anti-vaccine crew say it's all clear, it's over, it's done? That's really the risk.
The politicization of it I find particularly interesting as well. And it didn't just start, Tom, with the right.
Is it the
started
same
with
in
the
London?
left as well. Not in the same way. But you have to remember that when the former president was the individual developing the vaccine, there were some Democrats, Tom, talking about how they were calling it the Trump vaccine and they wouldn't be in a rush to take it. A lot of this science has been undermined from the very beginning.
Yeah,
and it's a failure, I think, of both parties throughout all of this, not to focus on the science together as a collective unit.
To Lisa's questions, I'm fascinated what the NFL and the Packers do with the quarterback for the Green Bay Packers. He's pretty good.
Don't benchmark yourself to professional athletes, whatever decision you make. I find that ludicrous.
The way I'm cut and chiseled, I'm not doing that.
Without a doubt, Tom.
Thank you.
I know, you're looking good. From New York, this is Bloomberg.
Проходим опасный участок, ответственный. Рустам поднимает тебя на жмаре. Шерпа страхует.
Очень много думал о том, что я сделал, и понял, что сделал какую-то нереальную вещь. Не знаю. Я до конца как бы внутри себя даже не могу поверить, что я через это прошел. Состояние, наверное, организм истощен, потому что очень много физической работы. Своим вот этим поступком хотел сказать, что только через действие в этой жизни достичь можно абсолютно всего.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, you know, what the challenges with getting people back into the workforce.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want? Ask a question or visit SearchGo to find answers.
Because we still don't know who's running this central bank. We talked about that repeatedly in the last 24 hours. He was asked about it yesterday, Tom. The chairman didn't want to go there. But that's the issue at play here, isn't it? What does next year look like in the economy? No idea.
No idea.
How does the Fed respond to it? We have a decent understanding of the reaction function, but I have no idea who the chairman of the Fed will be.
I go back to that single headline we saw, and I don't have it memorized, I'm sorry, but they said supply, demand imbalances. And John, that's the ambiguity that's out there between one set saying supply, worry, 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 and others saying, frankly, the booming demand is a worry, worry, worry. That's the microeconomic tension that PhDs have to deal with.
Stay humble, and this year has been humbling for the equity market bears. Equity markets up 7 points. Lisa, you liked that, didn't you? Up a little more than 1/10% on the S&P. Let's whip through the price action. It wasn't directed at you. Come on, it was just it's a joke. Yields in 3 basis points on 10s. 157. Euro dollar 115.46. We're negative 0.6%. Some dollar strength out there, Lisa, going into the Bank of England an hour away.
Yeah, and interestingly, you're seeing some pound weakness, even though the Bank of England is expected to raise rates by 15 basis points. That's what's being priced into the market. I'm interested to see how they message this, how they talk about potential slowing growth, the potential feeling hamstrung by a lack of immigration at a time when the price increases are really crimping growth. Then at 8:30 a.m., a slew of economic data that I am going to really parse through. Initial jobless claims expected to come in at the lowest rates post-pandemic, as well as non-farm third quarter productivity. We are going to see many fewer jobless filings in addition to higher price increases in wages, as well as perhaps a fall in productivity. This is not what the Fed wants to see. Are we seeing evidence of a tighter labor market? And today, OPEC Plus is meeting to discuss output targets. Of course, the backdrop is President Biden coming out, in addition to other leaders, and saying, pump more. And if you can't pump more on a headline level, then make up for those who cannot meet their targets. Please do anything. Bring down the price so that it can help us into next year when we're trying to send a message of growth and not necessarily higher prices when you go pump your car full of gas, John.
Lisa, thank you very much. Sebastian Page joining us now, Head of Global Multi-Asset at T. Rowe Price. Seb, I want to start with this line of yours. Rising rates are like coffee, egg yolks, and wine. It's not clear whether they're good or bad for you. Build on that for us, Seb.
Please.
You know, we all think rising rates are the risk for markets. I think right now we're moving towards inflation is the risk for markets. In fact, it's probably taken the #1 spot relative to COVID, which is still probably #2. But our study that goes back to 1979, where we looked at 9 different pivots where the Fed starts hiking, or we've also added 2013 where it's just started tapering. And we've looked at stock returns 12 months before that moment and 12 months after, which basically gives you 18 12 months observations. 17 of those saw positive stock returns, and the average stock return was 15%. So there's a lot of talk about don't fear the taper. Right. I think we don't necessarily, I don't think we should necessarily fear rising rates. Why is that? Because the Fed is typically comfortable only raising rates when things go well. And if things don't go well, then you get a more dovish Fed, so you can't lose.
Right. In your study, Sebastian, and this is so important with the academic bent that you bring to this, there is 1994. How much is Governor Brainerd, Chairman Powell, and frankly, all the rest of the ilk, how much are they affected by miscues or misguesses of that fated year, 1994?
I think they are, and it's clear that the Fed doesn't want to stress the markets, if you will. And what we heard yesterday is basically the Fed doing a pretty good job at keeping markets calm about tapering. Don't fear the taper again. And look, the idea is that we're not on autopilot. I think that's the key about the discussion yesterday, right? Yeah, we could crank it up, the taper. We could maybe pull it back even. And once it's done, we're not going to be forced to raise rates. So this whole narrative that we're not on autopilot, I think, is fundamentally what's keeping the markets calmer. And, you know, at some point, we're just kicking the can down the road, though. And we can, at some point, face a conflict between fighting inflation and keeping unemployment down. So imagine that. That's the tail risk.
Okay, Sebastian, take us back to T. Rowe Price and the initial heritage of the shop, which is small cap. Right now, we've got small cap glory going on. On an asset allocation bet, is T. Rowe Price saying wait to small cap because you're waiting to a certain growthiness?
We're actually slightly overweight small caps relative to large caps at the moment. You know, our tactical process in our asset allocation portfolios is looking ahead 6 to 18 months, which is a world where hopefully, likely there's less COVID. And, you know, we're thinking that the recovery's been kind of delayed with Delta, but not derailed. So what we've done is interesting. We've actually sold 1%, which is not a lot, of our stock exposure relative to strategic targets, but we've added risk back into the portfolio by playing the recovery trade, again, delayed, not derail, which includes a long position in small cap. Small caps are the asset class of choice in a growth environment. We're going to face less growth. Okay, we all agree on that, and we all kind of worry about the deceleration. But I don't know, 4% growth next year, that's still a very high number, maybe second highest number in over a decade, right? So we're still in a recovery, and this is where small caps tend to be the asset class of choice.
Sebastian, how concerned are you about distortions that go beyond just broad-based monetary policy affecting the asset pricing of everything? And we're talking small caps specifically. Avis, for example, they mention electric cars. Their stock rises more than 100% in one day. Bed Bath & Beyond, something similar. You see these pockets of seemingly irrational trading on an increasing basis that accounts for a significant portion of this index. How do you, as a sophisticated investor, operate around this?
It comes down to stock picking, and in particular in small caps, you need to know what you're doing as you're picking stocks as opposed to getting index exposure. But Lisa, you bring up a very important point. We've pumped 25 trillion of liquidity into the markets. It's actually, you know, as high as, over a one-year basis, we've pumped as high as 6% of the total size of capital markets. The highest we went around the great financial crisis was 3%. So this creates speculation. And you raised the question of speculation in the small cap space. There are pockets of speculation everywhere, and there are micro bubbles, and those micro bubbles will pop, and the markets will keep doing okay. You know, someone bought an account, opened an account on Shiba Inu, which is a spoof coin on a spoof coin on Dogecoin. They had $8,000 in that account. A year and a half later, that account, we don't know who it is, it's anonymous, is worth 5.7 billion. So yes, there's speculation in markets, there's froth, so you got to be careful and focus on stock picking, especially in small caps.
Sebastian Page, thank you, sir. Thank you very much.
It's Matt Miller, that's why.
Was that Matt, Tom? Joining us from T. Rowe Price. Seb, it's good to see you. Thank you, sir. In every bull market, you'll see a casino somewhere. Tom, it doesn't mean the whole thing is Las Vegas. And I think you have to be conscious of that. Not everything is 99, not everything is 2007.
Yeah, I agree with that.
Everything's different. It always is.
It's always different. And right now, of course, there's a new kind of globalization and the new technology overlay. But, you know, particularly in the macro blather, John, we focus back on important dates. 1994 and the Bank of Japan, I'm guessing 2002, 2003. And frankly, there's a few others that bring the humility you've talked about this morning. You know, I mean, John, you're a humble guy.
I try to be, Tom. And, you too. I mean, I've learned
like
from the best.
Our thematic tone here this morning of humility.
Thank you, Tom. I'm doing my best. Now, I said everything's different.
Okay,
it doesn't end differently.
Lisa's teachers conference is coming up, and she has a new humility.
I want to, beside my incredible humility, I want to talk about this idea that suddenly micro bubbles popping never becomes systemic anymore. Nobody has come on the show and ever talks about systemic bubbles. And to me, that's the sea change.
Well, here's the line from Seb Page. Either you keep getting upside surprises in the economy and earnings, or the Fed may surprise on the dovish side. Win-win for some people, at least in this equity market.
Yeah, good news is bad news is good news. Good news is good news. Yep. We're back in that.
You like that? I mean, I don't have an opinion on the market. You know, I try to keep that.
I don't
keep my judgment reserved and stay balanced on an equity market at all-time highs.
Just always bearish.
Equity futures up 7, advancing a little more than 1/10% from New York City. This is Bloomberg.
Dovish Prosecco, please.
With the First Word News, I'm Rishka Gupta. Federal Reserve Chair Jerome Powell is doubling down on the central bank's new policy framework. He says he won't consider interest rate increases until the labour market gets stronger, even though inflation could run hot for months. Fed policymakers announced they will start slowing their $120 billion of monthly asset purchases. Speaker Nancy Pelosi is pushing the House towards a vote on President Biden's economic agenda, but a few key issues are still unresolved, such as family leave, immigration, and rolling back limits for state and local tax deductions. And the measure still doesn't have the full support of Senate Democrats. In New Jersey, Phil Murphy has become the second Democrat in more than 4 decades to win a term as governor. He survived by a narrow margin that stunned Democrats already reeling from a loss in Virginia. Murphy led in recent polls by as much as 11% over Republican Jack Ciattarelli. He ended up winning by 1 percentage point. And investors have turned their focus to an OPEC Plus meeting on oil production policy today. The cartel and its allies are expected to stick to their planned gradual output hike for December. That's despite calls from consumers to pump more oil. The head of the United Nations Food Assistance Arm has renewed his call for Elon Musk to donate some of his wealth to alleviate hunger. David Beasley says systems are in place to save 42 million lives at a cost of $6.6 billion. And he posted a summary of a plan to show the world's richest person how that could be accomplished. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
And click on it, we make money. But now there's a big difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Engine number one was able to do on the Exxon fight. It opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that as either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is, is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
This week on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. This week on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Supply chain bottlenecks will abate and job growth will move back up. And as that happens, inflation will decline from today's elevated levels. Certainly, we should see inflation moving down by the second or third quarter. If a response is called for, we will not hesitate. So what I will tell you is we'll be watching carefully to see whether the economy evolves in line with our expectations, and policy will adapt appropriately.
That second, third quarter line, I think, is really important. We'll talk about that a little bit more in just a moment. Chairman Powell there of the Federal Reserve. From New York City with Tom Keene, Lisa Abramowitz and Jonathan Ferro. Your equity market shaping up as follows. Up 7 on the S&P. 5-day winning streak into Thursday. All-time highs. Staring down the barrel of another record. Up a little more than 0.1%. Yields in 3 basis points on 10s to 157.35. As Lisa said yesterday in the Fed show, if it was mission do no harm, maybe it was mission successful so far, at least. Crude 82.23 up by 1.37, up by $1.37, Tom, up by 1.7%. Just a bit of a bounce back, TK, in crude this morning.
We're above 80 on West Texas Intermediate, and of course the spreads nailed. Brent crude 83.44, up 1.8%. But John, don't you agree it's worth watching?
OPEC plus worth watching.
Yeah.
Lisa pointed that out earlier in the show, Tom.
Yeah.
The president, this administration, piling on the pressure. Will they fold? Will they buckle? Will they change course?
Very good. Who's the most important person in Washington right now? He is a ringer from Louisiana. He comes into the congressional baseball game and is definitively the best player to ever play there against a bunch of old men who can barely get around the base. Not that I would know anything about that. His name is Cedric Richmond, a congressman from Louisiana, and his current mailing address is 1600 Pennsylvania Avenue, where he has to salvage the Democratic Party for President Biden. Josh Wingrove briefs this morning. Josh, what does a former congressman from Louisiana say to the president today about the president's stunned domestic politics?
Well, they are, never waste a good crisis there, Tom, and good morning. And they are trying to take the results from Tuesday and use them to fuel the push to get that last mile on this deal that they want. Of course, recall that bipartisan infrastructure package, which Joe Biden likes a lot. He likes to talk about D.C. still being able to get stuff done on a bipartisan basis, being held hostage essentially by the talks on the bigger reconciliation package of other social programs that in particular are favored by progressives in the House in particular. And so that he's still caught between it. And he says, look, on the one hand, he's saying if we get this, we'll have better luck in 2022. Don't worry about these headwinds signaled on Tuesday. But on the other, a little bit of distancing, saying even if we had it, I don't know that it would have made a difference in Virginia. So, he's kind of trying to have his cake and eat it too a little bit, saying essentially Virginia is not my fault, but if we do get my bill, then maybe things will be better.
Okay, the word is pragmatic. How does the president, Cedric Richmond, Mr. Klain, how does Speaker Pelosi get pragmatic with the left of the Democratic Party?
I mean, I think there are signs that the Democratic left flank is sort of, moving towards being willing to take the deal in front of them. The big warning sign right now is on timing. House Speaker Pelosi, of course, wants votes this week in the House, but you've got Senator Manchin, now saying that these elections have passed. There's less urgency. We should take time, study more, wait for a CBO score, for instance. And so that vote might really delay. And so the question is, can Pelosi convince the House to vote now, even though the final vote in the Senate on the reconciliation package might be weeks or months down the line? We don't know. And so that is really the open question right now. Biden is really I think, soft-pedaled, if you will, the progressive wing in particular. He hasn't really wanted to rattle the cage too much. But look, historically, midterm elections are bruising for the president's party. Of course, Democrats know this from back under Obama. They got clobbered in 2010. There, of course, is a fear in Democratic circles that it's going to happen again, which means now is their window. Now is their window to do something, and that's why we're seeing the urgency that they have. Because if they lose the House, of course, you can expect very little to move in the final 2 years of his first term.
Josh, is there a larger message here about inflation becoming a very big voting topic for the first time in decades in the United States?
Absolutely. Absolutely. I mean, one of the things driving the churn that we saw in Virginia and New Jersey, is rural areas. Just the Democratic vote is just collapsing. I mean, these are Republican areas, but the Democrats usually sort of held their own, if you will, and this sort of blue collar lunch pail Democrat is increasingly extinct, and that's sort of where Joe Biden really built his career. This is concerning for them. They have to figure out how to reach out to these folks, and the cost of gas and everything Joe Biden talked about yesterday. It's a political problem, and they don't know what they do about it. Powell's remarks about things easing off, that'll be music to Joe Biden's ears. But if it is Q2, Q3, in other words, heading right into those midterm elections, then this is going to be a political problem for Democrats, no doubt.
Josh, you mentioned gas, and we've heard from President Biden pushing OPEC Plus to pump more oil, saying it's their fault. I wonder how much desperation there is, whether he is prepared to release oil, and whether he is prepared to really support the shale complex a little bit more to get that price down.
They are not looking keen on that, as would be my answer. I mean, the domestic politics for him of cranking up oil production domestically are dicey. And of course, one of the first moves that he did as president was killing a pipeline proposal from a lovely country to the north, and I'm very familiar with.